Man, I think I've been on mute this whole time. If that's the case, I'm really disappointed. Hope not. Jesus, I am behind the curve if that's the case. So we've gone through the into the basic pre-market here. I hope I wasn't muted that whole time. I got to readjust things here now. I got some kind of glare going on my I put overhead lights above my monitors. I have a 4-monitor rack in front of me, and I put overhead lights up there, and all of a sudden I'm getting glare off my mixer, which is real distracting for my eyes. And I was trying to mix it around. I guess anyway, let's get back to the point at hand. Here is our overnight session so far, 100% volume long. What do I expect? I would expect, but who the hell knows in this environment? I would expect some sort of responsive selling to take profit, but who knows? Volume is 300+% higher in this overnight session than typical. Our ATR range is around 11, I think. It's pretty, be extremely, I guess I probably shouldn't have to tell you to be extremely careful in this environment that we're in today. And I don't know what's up with the boys who like to make the tweets. I don't know I think Trump's in Israel. So maybe maybe that'll be some photo ops for him, and maybe that'll kind of, I don't know what the reaction is going to be here to this big sell-off on Friday, frankly. 408,000 shares, it's usually about 100, so yeah, that's about right. Boom, now what are we doing? Well, we have the reports. I'll just kind of loop back through everything here. This is Financial Juice, which has the calendar feature here, and then more of a squawk box over here. I also pointed out, which hopefully I wasn't on mute that whole time. I really apologize. Earnings season also starts this week. So it's just one magical dance to the other. And this is investing.com. So we don't have anything really on the schedule until 9 o'clock, the construction spending. And that's, don't forget, of course, the government is still shut down. So any kind of financial reports, let's look at this week. Will we get PMI? Will we get, the non-farm, which is booked for right here? Wait a minute. Oh, they've taken it off. Oh, no, there it is. Okay, they keep anticipating that they're going to get their act together. Children back in D.C. are going to get their act together, and we'll see if we get non-farm or CPI or PCI or any of those kind of numbers that we normally would expect in the week. Don't know. So let's now. Yeah. Seems like I'm way off track here, and I don't know why. Shouldn't have any more to say than what happened on Friday. This was the result of one tweet at 10 o'clock in the morning that was unsubstantiated by any kind of corroborating evidence or news sources or follow-up reporting. I'm not saying it was invalid. I'm not saying anything like that or anything political. What I am saying here is we as traders need to be on hyper spidey sense, so alert for risk management and any kind of thing like this. I mean, for all intents and purposes, this could have been 100% fake news and nobody knew, because it fell out of bed huge on the tweets at 10 o'clock with no backup, no confirming backup data. And to be honest with you, I've looked over the weekend and I haven't seen anything yet about this famous letters that were supposedly sent to various governments and upset everybody from China. There's been nothing about that. So I don't really know, what the deal is. Doesn't matter what the deal is. Here's the result. And if you were not prepared, didn't have stops in the market, didn't have your bracket set, you felt the consequences. So there we are. Man, it seems like I'm missing something here, but I don't see it in my notes. I have kind of since they haven't fixed my chapter markers yet, I'm just going down kind of a script from a previous one and changing the times as we go along. Yeah, so again, we're 100% long inventory overnight. In other words, we're 100% above the open. Typically, that would mean we would expect some responsive selling to take profit, wouldn't it? But it's a pretty well-balanced market for the overnight, considering we are at huge volume. I've got to do something here. I'm going to restart IRT after the bell here. Well, we ordered 304% last time I took a look at this, and now we're down to 298% volume over this typical time. Average volume of 137,000 contracts. We're up at 410 for this time of day. I've already talked about the session prices and the high and low volume nodes, which are pushed to Bookmap. And let's look at Bookmap here. Here's Bookmap. This is the dome. Very light. Look at how light the dome is this morning. Nobody knows what to do, I think. This is the micro composite columns, which I will update here in a minute. And here is the full session volume profile, which started plotting at 1700 last night and will go through 1600 today. The RTH volume profile, which will reset this morning at 9:30. And over here is the notes column, which is pretty important to me. And the notes are so far off this screen, you can't even see them. But trust me, they're here from Friday. Now, here's what we're going to do. The first thing I do is, and this is pretty funny. We opened Friday higher out of range, but we were up in the 68 handle. Now we're in the 67 barely handle, and we're still going to be higher out of range. And so the first thing I do is determine the open type. And I do that this way. I got to do one other thing now. I've gotten myself all screwed up. Sorry about that. I got to do a thing that I do every morning at 8:20, which is called the TLab snap. Let me just do that quickly, and then I'll get right back to life in the stream lane here. The TLab snap is something that I do every day. I do two, basically. And the TLab is a Bookmap Discord chat room called the Traders Lab. This is the snap I do every day. It's just to give traders there an idea for what the numbers are that might be interesting to them. It doesn't mean anything else than that. And the TLab was started by a guy named Tom B. who I believe is the real, he doesn't trade live, nor does he call trades, but I think he's the real deal. And he has a lot of philosophy and theories that I agree with. He's reportedly been trading for 46 years, and I promise you, you're never going to see a wrapped Ferrari or a gold chain. So if that's helpful to you. And the crowd in there is pretty pretty responsible and adult. It's not like Romper Room. And it's completely free. So I feel the sense of gratitude because I appreciated the stream early on when I started, when I first got back here to America. I somehow stumbled in there. So I like Tom and the people in there. So every morning I make that post and I make this little plug in the stream here. Hey, Richard. Okay. How about that? Is that any better? I haven't changed anything that I'm aware of here. How about that? Is that better? Richard, good morning. Anyhow, back to the, so let's do the real important thing. The first thing I do is determine the open type. And how do you do that? The open type is only got two parameters. If we opened right here, right now, where would that, okay, great. Sorry about that. Where would that, how would that relate to the previous close and the previous range? Well, the previous close is so far below us, we can't even imagine. So we're higher than the close, and we're within range because it was 227 handles. So we are still higher in range, believe it or not. The next thing I do is clear all the notes. Oh, and let me just show you. If you want to change this title correctly, you go to Configure Column, and there you can change the title. The reason I do that is because when I look at a screen snap or review the stream, I can see this column title and it instantly gives me a lot of information about the open type and the overnight, etc., right? The ETA session. Now we're going to put the statistics in here, which are associated with these session prices, which are pushed from Bookmap. And the way that works is the following. This study in IRT is the statistics for the open types and how the relationship of price revisiting the different levels. The way this works is very simple, like everything I do in trading. It's 2,000 days. The study looks back at 2,000 days. Of these 2,000 days, we opened higher in range 609 of those days. Of the 609 days where we opened higher in range, price revisited the overnight volume point of control 83.4% of the time, or 608 days. Overnight volume point of control 83.4. Boop. Oh, sorry about that. My boop didn't work right. There you go. That's all there is to this. Now I'm going to go down this list. Next on the order of business is overnight mid, which is 76.8. We'll jump back over here, back over to Bookmap now, to the overnight mid, 76.8. There you have it. These are not hard, fast targets. They are probabilities. These are the percentages of time, of days where this price level was revisited by price in the upcoming RTH session within a data set of 2,000 trading days, okay? That's real important to understand. Overnight high is 75.4. Overnight high, 75.4. And so on we go. Now, while I'm doing all of this, let's see what I've got one I want to do here that's important. I don't think there's any initial balance anywhere in sight. They're going to be so far above us. I'm not going to, these levels are so far. Here's the overnight low. Here's the IB low and the IB high way up here above us. And the previous RTH high, right? 68, 100. Well, 200 handles above us at this point. We're out 150. We're trading at 66.72. And here we are at 68.05. So what I was going to show you was this one, which is important. First, I assume everybody understands 61.7. The definition of the initial balance is nothing mysterious or magical. The initial balance levels, IB low, IB high, are they are only markers of the high and the low of the first 1 hour of the RTH trading session. And that is exactly it. That's all they are. The rest of the levels, equally simple, not disturbing or, mysterious at all. I have a POC. I guess it's worth saying first, I don't have any indicators on my book map or my IRT. I do have a POC for both the RTH, the full session and the RTH. The POC, even though it plots this yellow line, is just to show the history. The POC is actually just the price at which the most contracts have traded so far in the session, period. Then there's a VWAP for both RTH and Globex, and there's a mid. There's nothing else. And I'm all discombobulated here. We're going to open in a minute, so let's get to the important part. Let's get ready for the open. Let's get ready to rumble. So anyway, the IB, sometimes confusing to people because of the naming. It's an old market profile thing. It's just the high and low of the first 1 hour. Period. And this stream's all screwed up this morning anyway, so they're off base. Thanks for the heads up there, Richard. I don't know. Been a confusing tech weekend. We got all new phone. There we go. And we're open. Okay. Now there's something I have not done yet, but I will do. Notice these are 5 handles here. Okay, that's not anything that we want to be watching. Yeah, okay, thank you so much. What I want to do typically is get about a point high, which we are now, and I keep the entire session in view. And I do that with a real expensive top secret indicator called a vertical line, which I just slap on at the open. There you go. Well, that didn't even slap, did it? No, it did not. Why not? I'm going to get to the opening, 8:30. Bam, there's the vertical line. Now, Blue Boy is going to sit there all day, and this is nothing more than a visual cue for me. If I can glance left and see this blue line, I know that I've got the entire session in view. Okay, now let's try to get things normal again here. Bookmap, you can get screwed in so tight. I can get, Bookmap allows you to get screwed in so tight I can't keep up with it. Right now we're at 10 minutes. Here's Blue Boy, got not very accurate, and that drives me crazy, which is a short trip. So we're gonna remove that drawing. We're gonna put in another one right on the time, right on 8:30. There you go. That's good enough. And we'll start tracking the micro composite volume points of control. Or the migrating volume points of control. Boy, I can't think, talk, or do anything else. This is a holdover from my older workflow where I would keep the timeline at 5 minutes. In so doing, obviously, this yellow line would scroll off the left of the screen and I couldn't see where it had been before. So I relied on these flags. Now, what I do is make sure I have the whole session in view until we're approaching a setup or a market condition where I anticipate interacting with the market, i.e. trading, and then I can zoom in to watch price action, no problem. And here we are at somewhere, I guess, aren't we? Come on, man. I wish there was a way you could just click this damn thing and have it be right, but it isn't. There's 50 cents. We haven't gotten up to our overnight point of control yet, but that's probably on the... There's a reason why it's 80, whatever it is, 83%, right? Okay, now let me show you something that I always do but rarely refer to, and that's a quick scan of my environment to see if I pick up anything that I've done wrong or missed. And guess what? Notice this right here. I cannot trade on Bookmap because I haven't done what is required. And this is typically something I do in the pre-market, but I don't know what's wrong this morning, but anyway, sorry. In order to trade with Bookmap, you have to activate the trade control panel by using this button right here. I'm not muted. Okay. This is the trade control panel. You select the way that you will trade with your mouse on the Bookmap application. If you choose chart, the only place you can trade with your mouse is this active data column right here. If you choose DOM, the only place you can trade with your mouse are the DOM columns, and both is both, obviously. Now, the next thing I need to do is activate the multi-brackets, which is where I implement the risk-neutral methodology. This is the smallest risk-neutral package you can have because you need to have an even number of contracts. So 2 contracts, and then you determine a stop size for the entire package. And then with multi-brackets, I use ticks. I try to always think in ticks anyway. The first criteria you use to establish your stop size is your risk tolerance for your account. And we're selling off like gangbusters here. Looks to me like we're getting to that responsive selling. Didn't quite get up to the overnight volume point of control yet, but anyway, let's get on with this. Once you've established the size of the package and the stop size, the first take profit target is automatic. It's for half of the package, and it is for the same stops or same number of ticks positive as the stop is negative, whichever way. And then the runner is at however you choose to set it. In my case, 48 ticks. Here's a 4-lot. Here's a 4-lot high volatility with, a lot of ticks on that stop. And then the next thing I need to do here is do the multi-account trading thing, which is this. And that is, let me continue. Now that I've got that set up, I come back here to the screen. I don't need any of these other tools in the Bookmap trade control package. What I do need to do is verify the package size. And then if you notice all these metrics here, which are, accumulated position size, average position, all blah, 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 are all reproduced right here. So I can close the button again, which I'm still trading live. It's still green and the padlock's open, but I get my real estate back on the screen. I have the same metrics here, and I now am presented with two critical pieces: cancel all and close all. Okay, now we're ready to trade. We have a risk neutral 2-lot package queued up, and all is right with the world. We have Blue Boy on duty. Here's our IB low. There's our IB high. What are they? They are the high and the low of the first 1 hour. Nothing more complicated than that. We got within a couple of points of the overnight volume point of control. We've already taken out the mid. We've already taken out whatever the hell else we've taken out. I'm sorry, I'm a little discombobulated here this morning, but you get the point. Now, at any time, I can continue to input the statistic probabilities for each of these each of these session prices. And let me make sure I went through the session prices properly. There is nothing, hold on. And I'm sneezing and carrying, holy smokes. Maybe this is one of those flashbacks they always said would come, eh? God damn, I've been waiting a lot of years now. Nothing that I do here is, hey, Antonio, well, bon dia tu de ban fofo. Good for you. Yeah, me too. That's the whole point. That's the whole point of my, that's the whole point of the stream, Antonio. Nice to see you. Panda's been kind of crying her eyes out. She comes in here and meows for you every morning, but she doesn't see you. I hope everything's good with you, and I hope your experiment has worked, because I'll tell you, it has been the case for me, and I am 100% laser focused. I don't know if you've been around to see my backtesting stuff for the IRT. You may be interested in that, and I'll go through that a little bit here in a minute. For the IB trades, and I've got a certain set of, yeah, she's crying her eyes out, man. She goes, oh, ¿dónde mi Antonio? Mi namorado. Well, there's Spanish again. I can't remember Portuguese. Never mind. Sorry, I'll stop. Anyway, nothing's mysterious or magical here. It's all math, statistics, and price data. And anybody that tries to tell you otherwise is blowing smoke up your ass because they want you to buy something from them. That's my opinion. The POCs are just the price at which the most contracts have traded so far in the session. Now, I say I have no indicators on my charts or my Bookmap, but the VWAPs, full session or Globex and RTH, are calculated. It's the volume weighted average price. So, there you go. Yeah. Yeah, what I have essentially done is laser focused in on the IB, the two IB trades, and I have created an entire backtest method here. I'll show you quickly. It's pretty hard to see now because of the huge kerfluffle we had on Friday, which I hope you guys were all, managing your risk for. This is Can't even see it all here. That's all of Friday, and here we are today. It was 227 handles off on Friday. But what I've done is I've coded up. This is my trade system for the two IB trades, and I've coded up the levels as suggested by Rod. And then I took it one step further to use, instead of just the failures, to also code the continuations. And I have set up a system where you get levels. Now here I was waiting for the IB, one of the two IB trades to set up, and my first rule fired. And so did Trump. And there we go. And there was nothing for me to do but just stand back and watch, because there was going to be no levels fired and there was going to be no trades. I've also coded these levels here, except for the two triggers, to bookmap. And now they don't plot until 9:30, but because that's when the IB is active, and it's really being it's just almost mechanical. I'm trying to get away from discretionary as much as I can, and it's really relaxing, and so far working out. So good for you. I hope that you got something, really made some progress there. I was hoping something hadn't happened to you or lost your data or something like that. Obviously, it's always a pleasure to see you. So, yeah, here's Friday. This is probably, there's Friday, 227.75 handles. If you look at there on the, you look right over here at the info box, that's October 9th. 10th, I'm sorry. And now here we are. Okay. So we're live. The trade control panel is active. We can trade on bookmap. And I can, where'd Blue Boy go? There he is. Oh, sneaky little devil. There you go. What are we doing? Well, retail soup, eh? This is a holiday in Canada. It's their Thanksgiving, so happy Thanksgiving to all of those fellows to the north, brothers and sisters to the north. I grew up just basically, Montana is obviously borders Canada, just below Calgary, right there in the Rocky Mountains. That's where I grew up, on a ranch in Montana. So I can relate. Beautiful part of the world, the country. Or, now it's been, ooh, look at here. That's news. You can bet on that. That somebody just said something. That's exactly what happened to us on Friday. And it's gotten so, the random, unqualified critical risks which happen with tweets and stuff have become so common. I don't even think about it as anything to do with price action or market. I just immediately think, oh, so that's news, and look over there. And somebody else was typing something about that too. That's great, man. That's good. And yeah, and especially in this environment of critical risk, Friday being the absolute poster boy of that. That was one tweet, well, a couple of 3 tweets on Truth Social by Trump, with absolutely no backup, no supporting documentation, no supporting news references from anywhere else. I'm not saying that it was not, that it was fake news or whatever. I'm saying that the market didn't look for any of that and just came out of bed and then straight down, 227 handles. On no substantiated anything. It could have been, an AI hack and nobody would have known about it. They didn't care. They just got on. They just threw their toys out the window. Everybody out the window. That's all that happened. Yeah. So anyway, it's really been a a good move on my part. Also, glad to hear that that's working out for you. Now, this blue line of, is that top secret, very valuable indicator. So be careful of that. It is a vertical line. And I just slap it on the session opening print of each session. And it's nothing more than a virtual or visual cue for me to be sure I have the entire session in range. Then I never lose perspective of context, which is pretty freaking important, I think. Now I better get my charting switched around to the RTH session. I do that like this. Now we're only looking at the RTH Friday today, and got to be real careful about these ranges because it was so huge that I sometimes, if I have IRT too scrunched up, it won't continue to plot. It needs room to move, right? So there we go. And these are the minis, or the micros. I do this because it keeps the relationship of the session prices with regard to value area high and previous value area high, or developing, in range, which is completely meaningless because yesterday there is no value area in a big trend day, right? It's price looking for, and they call it discovery, I think. Of course, the charting is always going to plot these blue value areas because it's only looking at numbers. It's data, right? It's not some discretion. It doesn't know anything. It looks at the data it's given, and that's what it does. This is where where, if I can get it here, this area is where 70% of the volume traded on Friday. Period. But there is no value area really in Friday. So if, be careful of that. Okay. God, I am upside down and backwards there. So is everything happening? Well, everything except this stupid damn thing. This gives me trouble all the time, and I don't know why. That's not what I want. This Globex VWAP, for some reason, gets its knickers out of in a knot. It's supposed to be like this. Gets its knickers in a knot for some reason, and I just have to do something different here. Not a problem. It's like, who cares, actually, but I'll fix it in a second. I just turn it off, turn it back on, it recalculates. I don't know. How's the weather been over there? I just heard from an old colleague over the weekend that he and his wife are planning to look for a house and retire in Portugal. So be careful. There's a crazy Australian headed your way. Lock up your children. Yeah, that's a real important, personal epiphany to realize those things, that your job as a trader is not to just wear out your mouse clicking the shit out of that thing, but, stock the trade, that trading as a professional trader, as a successful trader whose trading is a business, is to wait for setups and take them. when they come, at setups that have been vetted and that have been proven to have a statistical expectancy or edge. And now, where are we? What are we doing? There is news at the top of the hour, so everybody be careful about that. There is, I don't know, have any idea how important that's going to be. It's construction spending. Let's take a quick zoom over here. Ooh. Let's take a quick zoom over here. God damn. Boy, this thing updated and it's doing all kinds of wonderful magic. Construction spending is going to be at the top of the hour. This is not updated. There you go. I don't know why that's... This computer, maybe I need to restart something, or do I restart everything, do all the updates, reboot, restart everything each weekend, but you never know. Financial juice. There's our market on open imbalances. We've been having some huge market on close imbalances, 3 billion and change, for example. Pretty incredible. And again, as I said in the pre-market, this is the beginning of the new and improved earnings season. So we approach the IB high. What does that mean? Nothing. It's not a thing yet. The IB high just marks the high and the low of the first 1 hour of the trading session. So as price goes up, this IB high will continue to move with it, and vice versa with the low. It is not a statistic. It's got nothing to do with it yet. Yeah, I don't know. Yeah, be really careful about the unidentified critical risk, the environment that we're in. I mean, Friday is the poster boy of that one. No political statement, no anything. It is a fact. One tweet can dump the market 227 handles. Only take A+ setups, stock your trades, keep well aware of the context and the environment. Now, I just stepped back when that happened Friday, because my expected trades and the trades I'm working on are the initial balance. Well, as I was pointing out, we got out. We went away from that immediately. Now, if you have a trade, or if you're a gunslinger and if you threw on a short, well, I suppose you're probably, fat, dumb, and happy this morning, boy. Probably. But that's not what I'm going to do. I'm looking at this for the long haul, not for some random outlier. And boy, was that a random outlier. A black swan, or an orange swan. Yeah, there's a new term. We're going to have to call those an orange swan. That was an orange swan event. Well, I like that one. There we go. Now we're taking that IB high up a little bit. Moving ourselves back up. And, this week is also, isn't it, an expiration week? Not any, major deal, but not a quad or anything, but there's expirations, obviously. Earnings season starts. I'm not sure what's on our risk table for the day, to be honest with you. I don't keep up with it. In a little bit, you'll see some levels appear over here on either side of the IBs. They are my continuation and pullback zones from my backtesting extravaganza that I'm doing. And I've also figured out to push them over to Bookmap, trying to keep my head screwed on here and aware of everything. So when they pop up, I'll point them out so you know what anyone would know what they were. They go, what the hell is that? We never heard of that one before. Again, they won't be happening until 9:30. Well, they took back some of that profit took a little profit from last night, and now they're heading it up. Let me point out one other thing here too. These expected moves that you see on my charts, something I'm trying to just experiment with to see. This is based on the implied volatility expected move from the options world on the SPX, I mean, which would be the underlying for the, and I have no clue whether they're right or wrong. I'm just looking at them. So, disregard them or whatever you want to do about them, but don't think it's something special. It's just the way I do it and the way it was explained to me, kind of, or the way I noticed someone else was doing it, who I think was Anne Marie, but I can't remember. You take the open, I can't show you here because this is now the RTH session only, but you take the opening print of the ETH session and you add the expected move above and below for the daily and the weekly in the case of now, today, and then I won't change the weekly all week, but every day I change the expected move for the day and add that expected move to that opening print. And that's how I get this line. The idea behind this, as I understand it, is, and I'm a real options donut, so, go do something else if you don't want to hear what may be wrong. The idea is that it's supposed to be essentially one standard deviation either side of that print, based on the volume, I guess, or the implied volatility, however the hell they calculate that one. And the idea is that expected move will generally contain the moves of the next day or the next week. Beats the hell out of me. But if you listen to Sosnoff or any options people, Tasty guys or any of that stuff, man, they're talking about expected move and implied volatility every second word. So, and they're not stupid and they make millions of dollars. So I'm guessing that there's something to it. That's why I'm looking at it. And if anybody has any more insight about that, let me know. Now we have pushed up through our IB high again. We've just turned 9 o'clock. I don't see much in the way of reaction to the news, which is not surprising because it was only the construction spending. And a lot of these numbers that were so important to us, they have to be taken in relative terms. In relative terms. Welcome to the stream, anyone who's here. Antonio and Richard. For sure. Regulars here. It's like cheers, man. Smack a thumbs up, smack a subscribe, drop something in the chat. Let us know where the hell you're from or who you are or whatever. Richard's from UK and Antonio's in Portugal. And I lived in Southeast Asia for a long, many years. And now back here in the, better for worse, back on this side. Crazy. Sometimes I wake up at night wondering why. Okay. Jesus, you know, we were at 6,800 on Friday in 1 hour. And then we sold down to 65 and change. Man. 66 and change, I guess you could say. I don't know whether it's important to try to keep some of this scale over here, whether that is helpful to anybody. Boy, I'm going to have to... Oh, I know the problem. There's a lot of volatility and volume coming through. We were at 300% volume ETH last night. Now I'm going to set this to the RTH only. Get rid of that crap. There's 121% volume RTH. There's our gap up. Close the gap up. This is the ATR RTH session, 5 minutes. Now just look at this and ask yourself, if you've got your brackets set up right, this is a 14 handle move in 5 minutes. Can that be the truth? No. Huh? Average true range? This is because I got something plotted here that I got from my RT. Never, ever take anything for granted. And if you see I'm doing something stupid, point it out immediately, because that's not my goal here, right? I'm not here to confuse or make everybody think that I am a some sort of frickin' wizard. Lizard to wizard, wizard to lizard, or whatever. I'm here to share this stream as my virtual journal. And hopefully, you know, it's either entertaining or comical or you learn something, whatever. So we're at 9:04. And what does that mean? That means the first bracket, the A bracket in the market profile, has been put in place. And there's something that I didn't do. So here's our market profile, and now there is the RTH only session of the market profile. Okay, there was yesterday or Friday, and here we are today. Sorry about that. Man, I need to go back to bed or do something. I'm not doing very good, am I? So I've gone over the multi-account thing. I hope... Oh, I didn't finish explaining that. I'm sorry. Hold on a minute. On the pre-market, the multi-account setup, which I smacked right there, is this stream is a top step evaluation account. My thinking was 0 to hero, right? A complete, absolutely transparent and fully accountable visual, record here on YouTube, visual and audio record of the entire process from starting to live. Now, I was within a trade of having all these into the XFA, which I took a stop, so that's gone backwards the other direction. And what the multi-account thing does is any trade or any action I take here automatically is replicated across 4 other accounts. What does that mean? Well, that's like what they call it, sim farming or whatever the hell it is, which I first thought was completely BS. Then somebody explained to me that I was just stupid. And, you know, don't look a gift horse in the mouth. If you do use the copy trade, it only works in the evaluation and the XFA. But once you take those 5 accounts to the XFA, you can continue the copy trade thing and get paid out on all 5 accounts rather than 1. Or you can roll that amount of build up capital into the live account after you've taken a couple of payouts, or they put you in a live thing. And then it's normal. It's 1 account, 1 trade, blah, blah, blah. So I figured, why not? That's the story with the multi-account thing. And you'll see very definitely how that works. When I take a trade, the confirmations, instead of just 1 confirmation that pops up down here in the lower right, it will run up 5 of them. Same way with a stop or whatever, you know. So it's all visual and it's all 100% here on the stream and fully accountable. You can go back and look at any stream and see them. And this is, you know, what made sense to me at the time, and so now I'm sticking with it. This stream is very definitely not my way or the highway. It is what I'm doing and what I think is working out, you know, what I'm trying to do to develop and maintain my virtual trading, my trading business. Not my trading gambling or my trading video game, but my trading business, statistical business based on probabilities, consistently profitable, you know, long-term, dependable. And if you're into playing a video game, super. If you don't need the money, you know, and you're just doing that because you like that adrenaline rush, great. If you've got a system where you can, you know, I don't know what, look out the window, and if you see a bluebird, you go along, or whatever the hell it is. Whatever works for you that is consistently profitable, do not stop doing that. And share it with us. As Tom says over there, often, you know, nobody can predict where the market's going to go. It's a random environment. But if you can, you be sure and call me first. And that's exactly right. That's exactly it. Okay. Well, the VPOCs are both plopped right on top of one another, so that's pretty cool. And they're both on the open. And I have got my little flaggy put in here, and I think I said why that was important. I hope. I'm not going to keep track of these little jigs and jogs over here. That's stupid. Yeah, where's Blue Boy? You see? Hiding, slacking, laying down on the job, that dog. I hope, you know, all joking aside, you understand the concept here. If I can glance left or out of my peripheral vision and see that blue line, I know that I have the entire context of this current session in view. What is our context? Well, there's our responsive selling, as I talked about a little bit in the pre-market. And then what are we doing? Well, if you want to be real old school, we got higher highs, higher lows. Ooh, here's Antonio's favorite, the VPOC migration. I still haven't made any progress with that either, by the way, Antonio. Had a couple of conversations with some folks, though, I think in Static or wherever, where they are. And a couple of times last week, as usual, I'm sure you noticed, 1 or 2 of them worked out, you know? And then the next one you got clobbered. So maybe that's the percentage. Maybe that's the statistics around them. I don't know. So we've now calmed down a little bit in volume because I'm able to set these. Here's Friday. Here's today. You see, we're trading right up here to this low volume zone. And remember that this value area is meaningless in Friday's trade. These colors are there because the computer just looks at 70. The value area is actually one standard deviation either side of the mean, supposedly, or one standard deviation of volume, as I understand it, which is 68.9 or something percent. And what I've done and what a lot of people do just to match with like Tom or whatever, the guys in static, I just use 70%. So wherever 70% of the volume happened is blue. There you go. And that's all it means. It doesn't mean value. The theory is that if that's where one standard deviation of volume transacted, that's where people thought it was reasonable to trade. That's the definition of the volume profile of the market POC, point of control. This is the most traded price so far in the session. What does that mean? It's the price that most people thought was okay to trade. Is that, retail? Is that value? Beats the hell out of me. You can do with that what you want, but that is the mechanical definition of how this line is derived. And it gives you some benefits. You can act like a real wizard if you're on Twitter or someplace. You can say, oh, I expect we're going to have a VPOC migration down to 89 here in the next little while, because you see that there's only a couple hundred points different from 49 to 47, and that's going to shift. All it takes is one contract to shift the POC, Stupid, but that's what they do. So we have the brighter yellow here, which is the RTH POC. We have the more muted, or whatever you call it, color, which is the full session POC. Now, I want to point out to you that 46.19 down here is only 200 and change from 49.31. All price has got to do is jump down here and trade a couple of contracts, and boom, this yellow boy's going to come zooming back down there. That's all there is to it. I mean, that's not all there is to it, but that is how it works. That's the mechanics. So, here we go. Now we're at 9:15. So my spidey senses start to pick up a little bit. And why? Well, what is the definition of the initial balance as it refers to a statistic in a trade? Well, we know that the initial balance is simply a marker of the high and low of the first 1 hour. And by the way, look at this. We've got about a 35 handle initial balance here today. That's pretty wide. What does that mean? Well, it means that the session so far today is pretty directional. It is not balanced or rotational. Okay, a couple of observations. So, the statistic associated with the initial balance is something that is right here. There is a greater than 97.9% probability that the IB high or the IB low will be exceeded by price in the balance of the RTH trading session at some point. Now, again, there is no statistic active yet because we have not, it's not 9:30. After 9:30, this will stop moving down, this will stop moving up, and that statistic will be active, and that statistic is right here. Looking back at 2,000 trading days, greater than 97.9% of the days, including today's open type, the IB high or low is taken out or exceeded. That is the IB statistic. So I've been waiting for that, and I will continue to wait for that until 9:30. And then I can, if I see a potential trade, zoom in to price level and look for my signals and my entry trigger. Those things come from what I'm developing now in my backtesting concept here. It's kind of hard to see on this chart because of the range, but let's look. So this is my backtesting environment in IRT. This is the session. This is the trading system that I've built. This is the confirmation, the visual confirmation chart. Having nothing to do with the actual system, except for the fact that each one of these levels and the rules, when they start to fire, exactly represent the rules and the triggers and the levels here in the system. So the idea is that I can watch price go as we're watching right now, and I can see if the rules are following the way I intended them to, and if the signals are firing the way I intend them to. There are 3 signals, and what I'm going to do at this point now is like that, so that I can watch over here. The levels are real simple. There's the IB low and there's the IB high. These are from Friday. Kind of hard to see, but you get the point. There is a pullback zone and there's a continuation zone for each. There's only 4 trades. There's 2 trades around the IB high and there's 2 trades around the IB low. There's an IB continuation and an IB failure for each. And obviously, the line, the way I've coded it or built it, these are custom indicators, and the signals are signal markers. So the way I've built these indicators is they don't start plotting until 9 o'clock. I don't know if I can get that over there. Yeah, there you go. They don't start plotting until 9 o'clock, nor do the signals start firing until 9 o'clock. Here would be an example of how the signals would work. There's an A, then you look for a B, and then you look for a trigger. Sorry for the smooshed up view here, but you know, the scale is all messed up because of Friday. Now, we'll just watch over here in the real time. Come on, you son of a bitch. IRT's having a real drama. I think any plotting, charting software is probably having a drama now around the volume. I heard a pretty phenomenal statement or whatever the other day from Tom Sosnoff, actually. He's left Tasty Live, and he's now starting a new thing called Lossdog, Lossdog. It's going to be another media thing for the distribution of wealth, not for trading. But anyway, he made a comment about when they started Thinkorswim, they were processing something like a couple 100,000, well, maybe a million or two quotes per second. I should know these numbers before I say them, but anyway, and now, recently at Tasty Live, they're doing something like 200 million quotes per second. I mean, just phenomenal increase. And Chad actually mentioned that in one of the videos that I watched from him. Chad Payne was the lead programmer, the guy that basically built IRT, was now left, unfortunately, but I mean, good for him. He worked there a long time. He said, you know, with the huge increase in volume and all the calculations that need to be done, sometime it's going to lag. And if you notice over here, there's lag. They've even provided a lag column. So if you start getting lag numbers in here, these are in milliseconds, you know it's choking. And IRT will do the same. I mean, Bookmap does the same thing. They've got this wherever the hell it went down here at the bottom. They've got a little thing down here somewhere that's like a set of bars, and if it turns red, there you go, data ingest subsystem, and if they start, these bars are yellow, then be careful, and if it turns red, it's choking. Yeah. Anyway, what I was saying about the backtesting is as follows. Once 9:30 happens, in 5 more minutes, the IB high and low will be set. The statistic will be active. And here we go. Kokomo Joe. Then I start watching for the signals. And so far, I've traded them pretty mechanically. One winner, one loser, I think, which is something that's going to happen. I mean, another thing that I have that's kind of important to talk about here is well, I'll do that here in a second again. Ever since this chapter marker thing broke when they updated OBS, I'm having a struggle with that. Funny how you rely on stuff that you don't even think about. Okay, boys and girls. We're fast approaching the 9:30 hour. What's going on? Anything going on in random risk? No. Well, these would be current session numbers, and there's obviously nothing there. Tomorrow's going to be fairly big, including, financial earnings like Goldman. Can't believe we're in earnings season again. It just rolls in one shit storm after the other, eh? No. Okay. All of my levels and stuff here I didn't get any of this updated over the weekend. I'm sorry. I'm a donut. I get rid of all these, I guess. This is my micro composite column where I enter these valued manually and typically take them all off over the weekend. We got all upside down. We're going to look at a new college for our daughter and traded in all three of our phones. And then I spent the rest of 2 days, trying to remember passwords and crap. I got to come up with a password system that works. Passwords and stuff so that I could have all of my various things on my new phone that were working so well for years on my old phone. I'm not a big phone guy, so I did it because the girls wanted to. So I went from a iPhone 10 or something, or whatever I had, 8 maybe, to a 17. Yeah. So here we go. We're going to have that 9:30 here in a minute. Okay. There you see our ups and downs. And here's why. This is how I used to do it. Well, no. This is how I did it before, 5 minutes. So you see that the yellow brick road here can scroll off the left of the screen, and that's why I use these flags religiously. Now that I have Blue Boy on duty, over here, wherever he went, a little scallywag right there, I can see all of the VPOC migrations, and I can see the contacts. Obviously, if I look at IRT, it's the same. I have the migrating VPOC and everything else, right? I have this pretty scrunched down to try to see the full range from Friday. I'm not sure that matters all that much, to be honest with you. You can see the migrating VPOC, the same. I try to keep the colors the same so it's, my old brain works. But as far as bookmap goes, that's my new idea, and I like it a lot. So now let's get back over to Backtest Boy and see where we're going. Okay. The IB low, the IB statistic has been set 23 seconds ago. That means this guy is not going anyplace, and this guy is not going anyplace. There's two things that are real important to understand. You see how these levels are so close together? I have a thing called range requirement, and that says that I want to have an unobstructed path to the first take profit target to validate an entry. What does that mean? That means that if these levels are all stacked up and there's not 3 points to one of these major obstructions, and what I mean by obstruction is anytime there's a major level like this, there's a high probability price will react when it gets there. Maybe build back, maybe whatever. So you want to have it be an unobstructed path to the first risk neutral scale, I think. So that's one. A second real important thing to cover right here, right now, is do not trade to the statistic. Big deal. Oh, we're below the VPOC. We're below the mid. We're below the VWAP. We're going to take the IB low. Well, maybe we will. Maybe we won't. A lot of times we'll come down here and then go up there. The statistic is not in action, active yet, because it has not been set. The statistic says the IB low or high will be taken out. Now it's a statistic. Now you can start to do your IB trades, which is what I'm doing. And I want to change this around to say something different here. Ooh, wow, what happened there? Okay, that's really important. You see what happened? You get short right here because you're all excited. You're going to go down there, and now look at it. You're stopped out. So it's not a thing yet. I will now point out, you see we got the pullback level high, the pullback level low. Down below us here we have the continuation level high, the continuation level low for both the IB low and the IB high. These are those levels which come from my backtesting environment, which is over here. And now you see them starting to plot. It's 9:30. Okay. And that's how it works. By golly. And I will start watching for why that won't work. I don't know. God damn. I've got 64 gigs of DDR5 RAM and a bunch of other stuff here, and I just can't seem to get this piece of shit to work. Really irritating. So let's look at our... You see now that the level started to plot at 9:30, and here's our price. We'll get the price a little bigger, and now we'll look for our signals and see what we think. See how it works. A quick mental checklist. Oh, here you go. See, remember that don't trade to the statistic? That's 80. This is 67. Remember that these are 1 point. That's kind of a disappointing, be pretty disappointing to somebody. And where'd that sneaky little blue guy go hide? He's lazy, this guy. He slips off to the side there every chance he gets. Look at us go, boys and girls. Okay. How'd that trade to the statistic work out for you if you took it? I'm telling you, man, these I'm not any kind of a wizard, or I would not ever suggest that I was a all-knowing trading soothsayer, but you know, after standing here for a long time, you start to learn, you start to get your head around, just like Antonio and I joke often about I joke with Antonio about the VPOC migration trades. It's a setup that a lot of people use, and I haven't not been able to figure out how to make it work. You can't miss the damn setup. How can you miss where this yellow line is moving? But that's meaningless. What's meaningful is the qualifying parameters that justify or validate the entry. That's the part of trading that's where you need to really do your statistics. Capture a data set and validate it. And then trade it. And that's what I'm trying to do over here. That's what I am doing over here, not trying to. And these rules that are here are, started out with Rod. Something that Rod said, hey, here's the rules I use for my IB failure. And I finally figured out how to code them up into the trading system. It's not coding, but it's, you put it together and have it working correctly, sequentially with backtesting. And then I thought, well, if that's the way we're going to go for IB failures, I'm going to flip it on its head for IB continuations, which is what I did. And so now I'm capturing data sets and backtesting those two setups for each IB high, for the IB high and for the IB low. And there you go. And now we're surprisingly well balanced. I mean, when you look at it over on IRT here, it looks fairly like a much more balanced rotational kind of day than if you look over here on Bookmap. It seems to look a bit more directional. Those are important because the IB trades, there are two variations. One is the IB failure, which means we come up and take the IB statistic, we can't get any further, and we mean revert. It's a fancy way of saying a mean reversion trade based around the IB statistic. The other trade is an IB continuation. We come up here, everybody's let's go, let's show, let's rodeo, and away we go. Typically, a balanced rotational day would suggest an IB failure, right? Because it's mean reversion. That's a commonly understood trade in any kind of a rotational or balanced environment. And conversely, the IB continuation trade is, hi-ho, let's go, and it's a off to the rodeo, and then it's a directional day. So let's watch and see if we get a signal. And if we don't get a signal, just like Friday, then I just push the mouse aside and go, wow, that's fun. Look at that go. I could have probably just, thrown my rules out the window and thrown a short on and be all funded across all these accounts and then think I was a wizard. But I can tell you one thing that's really important in trading, in my opinion. And that is I can't multitask. This is why I use this stream. Probably, I think one of the most dangerous things that can happen to a developing trader is when you break your rules and it works. You move your stop away from entry and it works out in your favor. I throw my rules out the window and I jump on it. I throw a short, just YOLO a short on Friday, and it works out in my favor. I mentally and intentionally stay away from anything like that because it's a fact of human nature. We remember positive stuff. You will not remember. You move your stop away from entry and it worked, and you don't get stopped out and it goes to your profit targets. You'll remember that till the cows come home. You will not remember all the hundreds of times you moved your stop away from your entry and it went on to take your stop and you lost more money than your risk plan allotted for. Because that's how humans work. That's all part of our monkey mind, which we can talk about at some point later. It's who we are. Speaking of who we are, I need something to drink. I'll be right back. Get ready to trade there, Antonio. I'm leaving. Okay. No signals. Nobody on third. Here we go. I'm really I'm happy that you figured out, or working on that idea of focus, Antonio. That's a really great thing. That's essentially, basically the same idea I've done with this, and why I'm not always, chatting and participating in the TLab and whatnot like I used to do for years there. I want to focus on this on what we're doing, and that's whatever it takes to do that is the mission, right? The goal is to have a successful, consistently profitable trading business, not to be a chat room wizard or or an internet guru. I mean, sure, I would love to be a highly paid YouTube influencer. That would be great. But I'm pretty sure that's not going to happen anytime quick. It's funny how I will come across somebody on YouTube that I had bumped into years ago, and or something, or watch some video of theirs where they're struggling. This is how I'm day trading and this and that and something else, and now you see they're interviewing someone with some sort of a podcast, and this has got to be news. Some sort of a podcast, and they've got several hundred, few thousands, whatever, 5,000, 10,000 or something viewers, and good for them. But you don't ever see them trading anymore. They've switched to a different business model, which is, it's like whatever works, eh? I'm sticking with this because it's what I've got. I'm an broken old cowboy. I'm not some good-looking little gal that can get a bunch of views just because I'm a good-looking little gal. I saw it. There's a gal. This is so funny. I hope I can find the snap I took. I thought it was hilarious. Well, I can't seem to get my thing isn't working very well here, I guess. Oh, I hope I can find her. I don't guess I can't. Damn it. No signals here yet. By the way. Oh, come on, man. Where'd you go? Oh, wait, maybe I can do this. There we go. Oh, yeah. Now, this gal is, I think, maybe a reasonably good trader. She calls herself Bull Barbie. She's supposedly a Texas something or another. I want you to look at this. Look at this thumbnail for a short for her. This is back in the days when everybody was doing opening range breakout rules. Look at this. Look at this video and tell me if you don't think, or this screen snap, and tell me you don't think it's funny. What's with the banana? When I saw that, I thought, what the hell has that got to do with anything? Except, the implied what she's going to do to that banana. I thought that was so funny. Sorry, but I thought it was funny enough to take a screen grab. Okay, nothing. Well, we had a big down move candle there, and I would guess that has something to do with news of some variety. Otherwise, why? Now, are we just rotational? Maybe. What I'm watching for over here is my signal. Remember, we have not taken a statistic, so there's no trade valid, no setup would be valid yet, or entry. And if Tweets or Us keeps out of the way, we'll be all set. I was all, thinking Friday was going to be just a great day. I had my A signal. I was already. The A signal is just the statistic for the initial balance. And then the B is the pullback zone, and C is the trigger. Pretty obvious. Or pullback or continuation zone. And the trigger is the trigger. And there you go. There you have it. I'm set to trade. I've got my brackets in. I got my package size correct. I'm on both. Yahoo buckaroo. Here we go. See how disappointing trading to the statistic could have been. Right here. Where's this bashful boy at over here? There you go. What have we got laying around? Well, we got 214 of them laying up at the 67 handle there. They've been in a long time. And $1.50 below us, $1.80 at the 90 handle. Okay, another one of those don't trade to the statistic deals. Now, if you're not vetting the IB trade and you're doing mean reversion trades, there's been a couple of good opportunities. Here you go. Boom. Outside in. Wow, huh? 97 to 70. 27 handles. Outside in. Not so many handles, or, not such a big profitability, but mean reversion is a very definite entry type or trade that can be vetted, but I need to vet the trade properly first. And, what I'm doing now is in the final throes of the IB trades. And then I will move on to the next setup. And the goal here is to have several trades in both environments, directional or rotational, several setups which you have vetted. You know very well, you anticipate when they're setting up, and then you take the trade. That's that's the goal as I understand it. And once again, trading is not a breakneck speed hunch and guess adrenaline rush if you approach it as a statistically significant profitable trading business. It's not gambling. It's the gaming industry from the point of view of the casino, the house, not the gambler. Do I think we're going to get one of these statistics out? Well, yeah, I do, because it's a 97.9% probability that we're going to at some point in the trading day. That's how it works. Statistics, right? I'm not a fortune telling. I'm looking at the probabilities. 97.9% of the days, looking back over 2,000 trading days, this level or this level was exceeded by price in the balance in the, at some point in the trading day after 9:30. What's the other side of that coin? 97.9, 2.1% of the days we took neither. That's pretty slim, huh? If you had to guess, if I had to guess, I'd say we're probably going to get one right down here now before too long. But I'm not going to trade to the statistic because that is a low probability outcome, in my opinion. I'll point out something about my backtesting stuff here, if anybody's watching this, to be careful about. There is a B rule, but there's no A rule. So this is not anything to do with the probability of it. This is not setting up a trade. I'm not going to bother sequencing this, and qualifying the signals, because it's got nothing to do with the backtesting. All this chart is for me to visually confirm, and I know there's got to be an A, and then there's got to be a B, and then there's got to be a trigger. So, I'm not going to worry about that. I got better things to do with my eyesight and my time than that. Or more productive. I shouldn't say better, but I believe more productive time. Once again, you got down here, you're going to trade to the statistic at 64 and you're stopped out at 67. Just an example. And I'm not sure why this B over here doesn't look right to me. Is it just me, or am I, crazy or what? It looks kind of goofy. I don't know why. I know that what it's supposed to be, but I'm not sure why that's doing that. I'll tell you what, the reason I'm sensitive to that is I had a few days, last week, I guess, an absolute perfect A-B trigger for the IB continuation short, and it worked out miraculously. And I was standing here watching it, narrating it, and I missed the B, thinking before I had changed the size of the font, etc. I missed the B, and I said, well, there's an A, but we don't have our B yet, and here's the trigger. And if I'd have just noticed that, two things I did. I increased the font size, and I moved the trigger, or the rules, away from the 12 picas or whatever they are, away from the bar. And the trigger, which will be an arrow up or an arrow down, is right at the bottom. And what I misread the B as a trigger and didn't take the trade, and it would have put all 5 of those accounts into the XFA. And I just didn't catch it. Strictly my setup and eyesight, which my eyes are really taking a lot of strain lately with the literally the strain. So what? What's our context? Well, pretty damn rotational. Boom, bitty boom, bitty boom. Now remember that value area low is for the previous auction. In this case, Friday was, so there is no value area. Developing value area low is for the current auction. And yeah, there you go. quick round the horn here. We've got another B over here, which is not valid. There's no A. I know it's really simplistic, but, you know, I'm an old cowboy from Montana, so, you know, you fast-thinking city slickers can do something different, but this is the way I'm going at it. Putting a lot of consolidation down here at this low, huh? Now, a word of advice, explanation again. This is the pullback range IB low high and the pullback range IB low low. And this is the continuation range IB low high and IB low low. One of each for high and for low again. So are we going to take our statistic? Ooh, baby. That got some people all excited right there now. We got a high volume node below us at the sixes. The devil. Triple six, isn't it the devil thing, the 666 or some silly shit like that? I love these new YouTube things. I don't know if anybody's seen them but me. I listen to YouTube stuff at night. Typically, I try to find something trade related, Patrick Boyle or something else. But I notice a lot of them. If this video finds you, you're guaranteed it's meant for you to watch, and you're going to have some new thing and a wonderful happen, boy. These people lay awake nights coming up with hooks, don't they? It's like the girl with the banana over there. Then they lay awake nights. What a concept! If you think about that for a second, wow. And you wonder how many people believe it or buy it to think, oh man, I was chosen. And maybe they were. I don't, who's to say I'm right and they're wrong, but I'm skeptical, that's for sure. Well, how about that for don't trade to the statistic, huh? Jesus. Criminy. Yeah, I'm trying to do something here. And there's another stop if you were looking for that stat. Now over here in Signal World, you see we've got all these B's. And guess what? No A and no trigger. And I won't do anything until I have those in order. And then I need to, at that split second, assess. So I try to think about this in advance, not to trade in anticipation of the statistic, but to anticipate my next move after the statistic is set, assuming it could be the low. What do I think about context? What do I think about range requirement? Would those things which could invalidate the entry apply? assuming I get the A signal, the B signal, and the trigger. And they've got to be in order. Because we had a B at 8:50, at 10 o'clock doesn't mean it's applicable because we don't have an A yet. I mean, that ought to be obvious, I hope. And I'll show you where all that's going and how all that ties together with the backtesting. I don't even know where I am. Let's see, 2 hours and 10 minutes in. This is so inconvenient having to try to juggle my script around for my time chapters, which are so important. The reason the time chapters are so important in the stream, I don't know about you, but I'm sure as hell not going to sit and listen to 7 hours of this every day, hoping for some, looking for something interesting. I want these time chapters so I can jump around. The other day when I didn't pick that rule up, I was able to jump right to that timestamp, and I was clearly wrong. I articulated very, very clearly, well, we don't have a B signal yet, so I'm standing by. And we did have, and I didn't take the trigger, and, the rest is history. It sold off, 40 points. But that's the purpose of them. So that's why I struggle a bit. I had a great system, a plug-in that worked like $1 million, but the plug-in was broken with the update of OBS 232. And the fella that coded it up has yet to fix it because he's got things that people pay him for, I'm sure, and he's busy, not stupid. He's busy taking care of that first, and I understand. It's just a pain in the butt from my point of view. The way the plugin worked was really slick. I preset a whole list of chapter things that I usually do: reports, pre-market, TLab, two-lot package, on and on and on. RTH Open, and then it was all set up with hotkeys. I just click a hotkey and boom, there it went. The time coordinated to the activation of the hotkey as it related to the stream start. So all the times were perfectly related to the beginning of the stream. So if you say, something at 2 hours in, it was 2 hours from the start of the stream, not 10:30 Eastern Czechoslovakian Standard Time. Pretty cool. It's called Stream Up Chapter Markers was the name of it, in case anybody cares. Doesn't work anyway, so never mind. So don't care. And ironically, OBS doesn't have any system that does it on its own, and I have not found anyone else that made one. I guess everybody relied on this fella's one, because if you Google it, they all refer to that one. Or IA it or whatever you do. Look at that, huh? Boy, how did that fit with your trade to the statistic? Yow. So on the bigger scale, what are we doing? Well, we are mean reverting in classical style. So if you have a mean reversion setup that is vetted in some way, I bet you're making money hand over fist and just happier than a pig in the mud, huh? I hope so. The reason I time filler here, the reason I chose the IB trades, first of all, I like them. It's a stat that I relate to from market profile days. And second of all, it gives you two setups to vet for both trading both trading day types, balanced or mean reversion and directional. So you've got two options there. If you vet the mean reversion trade, that's all you got. You don't have anything that would apply to a directional day. That makes sense. Okay, where are we? Who's on third? I don't know. Abbott and Costello, that's who that was. I couldn't think of it for a minute. I was thinking Amos and Andy, and I knew that wasn't right. Well, let's see what we can see here. U.S. Envoy Witkoff will be here quite a bit at the direction of the president. What is he talking about? Oh, I guess the Gaza story. So he's still tweeting, not that. Let me just do the critical risk thing once again to make it really clear. I have no political agenda whatsoever. But if you are a project manager or running a trading business or any kind of a business, the first thing you want to do, or that you should do, after you've got it established, is analyze and identify any risk to your business, right? And then you create or come up with a risk mitigation plan, is what they call it in project management world. Okay, why do you think this is exactly why we track non-farm payroll? We know that it's the first Friday of every month at 7:30 in the morning, and it's got the greatest impact to move the market. Boom. Risk analysis, risk mitigation plan. Best thing to do is stand back non-farm payroll, unless you have a vetted strategy for that. That's why we have these reports. That's why we have these news services, so that we know all of this stuff. And that's why they rate them by, by the way, Powell is speaking tomorrow, incidentally, at 11:20. That's why they rate them with these stars, because of the potential impact on the market. PPI, core retail sales, so that we know at what time and what potential risk there will be to the market, which can tell you or should give you some insight as to whether you ought to be engaged in that market or not. Now, anything to do with Trump or the administration that is not scheduled is a potential critical risk, and it's unknown. Did you know at 9:59 and 30 seconds yesterday that Trump was going to throw a tweet out there and the market was going to dump 227 points? Handles? I didn't. And if that's not the quintessential unrecognized critical risk, I don't know what example could possibly be. Therefore, in my world, you be very cautious and only expose your account to the market risk. For A-plus setups, always have your bracket order in place. You bet. Are you going to get slippage? But you're going to get taken out. You are going to get executed and out of the market. If you don't have any stop in place or any target in place, and you got a You got a long or a short. Well, imagine if you had a long on and no stops yesterday. Oh, or Friday. That's why I harp about this unrecognized critical risk, potential risk. And it's, again, not political, but this is only, I've been doing this trading a long time, and except for 9/11 or 2008, there has not been stuff like this, and it was not to do with the government. It was not to do with the administration. Why is that important? There are several people there, Trump being probably the most prominent of them all, that cannot resist a microphone moment or a photo op. They like that, and they seem to take some pleasure in saying things that are kind of produce volatility. So that means it's a higher risk. Simple. I don't care if it's, Joe Shit the rag man. It's if that's what he did. If the milkman had a risk potential like that, I'd be talking about that. So that's something that's really important to understand. And boy, I really hope that all this Gaza thing comes to pass. I mean, that would be wonderful. Certainly wonderful. After all these years, those poor people, on both sides of the coin. But seems like the Palestinians seem like they've gotten the short end of the stick most of the time. If you just look at quality of life and stuff. I don't know. Never been there. Never been in the Middle East. Well, been to Dubai and places, Qatar and places like that, but never been to Israel or any of that. Well, here we go. What are we doing? Who's on third? All the way down and all the way back up again. So boy, oh boy, is this a perfect, beautiful, no heat, mean reversion trade. And this could kind of, I'll throw another thing in here just for the hell of it. Still don't have any signals, so I'm trying to think of stuff to do here. See if I can do this. What have I got going on here? 02 30. What am I doing? Oops, I forgot the zeros over there. What I was going to put here is looking back at my old hotkeys, trying to figure out what I got going on. Okay. How can they be off? What I'm going to talk about here or point out, but I'm trying to get my act together, and that's losing its importance. It's called asymmetrical trade location, the importance of asymmetrical trade locations in everything we do with trading. And, here is probably one of the best examples of it in a million years. You got a long right there. Look, you're working mean reversion trades. You got a long right there, or right here. Where's your stop? IB stat, or right here or right under here. How does it relate to the potential? Well, it's asymmetrical. The risk to reward is a huge asymmetrical risk because you've got the whole other side of this distribution to go. Now, technically speaking, a mean reversion trade is outside in. It's to the POC, which is here, but that's still 11 handle, or 10 handles. So that's still a reasonable asymmetrical trade. And then if you get this far, you got your, you get your scale, you get your helmet on, you just put your feet up, and isn't this a pleasure? But it's asymmetrical trade location is really important, especially in the mean reversion kind of world, because you need to think about that. And if you're using bracket orders, as I am, when you get the signal, even though you get the signal and it is a valid entry, where is your stop going to go? Well, if you take this IB low out, you come back, unless you get down here, get real clear signal. If you took the IB short, assuming that the IB statistic was taken here, and you go short at the IB low, where's your stop? It's right in the middle of all this traffic. So that's something to think about. And, not like not like I need something else to think about, but you see the point. And guess what? Not a piñata. Okay, well, here we go. What? I don't know what is going on with his mouse, but I'm not liking this very much. It doesn't seem to want to do what I want. Isn't it amazing? Never mind. Never mind. Okay. Nobody home yet, trade-wise. The idea of this whole backtesting thing, I will go through in a little bit with the actual backtesting. Obviously, this is just the first idea. Then the next setup, I will change the indicators and the rules around, and away we go. Because I always want to have, I guess I'm just, I don't know, old anal OCD, whatever it is. I want visual confirmation of what's happening, especially because this is for backtesting, and my backtest, I don't trade, I mean, my trading system doesn't trade in the live environment because I'm not confident that I want to know that it's all correct. So that's why this visual confirmation is important. And I do trade them, but I want visual confirmation of it. And Antonio, by the way, if you're still, oh, no, you're probably over at the stream. Okay, never mind. You could easily set this same exact thing up on TradingView or wherever. And if anybody has IRT, I'm happy to share the definition for this chart, no problem at all. But and also for the backtesting system, if you're interested in that. But if you don't use IRT, it's real simple to set up something with these basically 1, 2, 3, 4, 5, 6, 12. It would be 12 custom indicators, and assuming that your system automatically plots the IB high or low, and if it doesn't, well, then you need to deal with that. Now we're going to get an IB high pretty darn quick here. There's our first little trigger. You see the trigger arrow fire, the difference between well, here's one. Here's a perfect example. There's a rule and a trigger, and that's what hung me up the other day. I had the rules right down over the top, and it looked like an arrow to me, and I'm, dumb, old, tired eyes, whatever you want to call it. Now we have a similar issue now, similar instance on the top side as we had down here. Wouldn't it be funny if we did this? I tell you what, it'd be really comical as if we, well, I don't know, comical, but it would certainly be worth taking a screen snap of, is if we did this all day and didn't take either IB high or low. Now, I had not remembered that ever one of those, but we had one of those 2 Fridays ago. I think it was 2, 3, and yeah, it's all a blur, but a couple of Fridays ago, we had a complete non-IB day, whatever you call it. We did not take either one of them. And if you happen to be watching that signal through a B, then went away, that's because it's based on the close. There you go. Now watch. You see it goes away? That's because of the close needs to be within the pullback zone. And and these are just the way I wrote the rules. This is the beginning of the process. I'll explain it in the IB, in the back, when I get talking about the backtest stuff. It's not falling off a log simple, that's for sure. And it's not instant gratification. It is a process. My belief is that once the process has been put in place, then I will have a statistically significant, consistently profitable trading business, and I need that. This is my career now. Considering my old one evaporated earlier in the year, much to my chagrin. In the hell are we? 10:35. My. So you see that we are 1 hour into the IB statistic session period. We have not taken either the IB high or low, and we have crossed the range completely. Basically twice. Almost. If you count this as completely. That's definitely a price check at aisle 3, right? That's a Tomism there. So there's 1, there's 2. And yeah, I expect we'll take one of these, probably the high from the looks of it. But a minute ago, I would have said that for the low. So, 15 minutes ago. You can bet these have got some traders crying. Some of those can't pick the top. Gotta click that mouse, folks, are just having a bad day here now. I don't think I like that font, whether my eyes are just extra tired today or what, but I'm having a hell of a time picking the B out when it's over the top of the volume profile over here at the edge. This looks all squiggly. I mean, I know that it's not a trigger because I have it standing off the bar, and it's pretty obviously not an A, but I don't really like that very well. I'm gonna have to think about that. One of the just, off the side comments here, I never change anything, especially the rules or my plan during the trading session. Well, I don't know what my wife's getting up to out there, but man, the smell is killing me. It smells so good. And I'm so hungry. How about that, huh? How about that? That's pretty amazing. I have no idea whether this is true or not, but there's an old theory that for the market or price. Oh, here we go, Antonio. Here's back up to where we started here, almost within a couple of handles. There's a old market trading idea or theory that it's the higher time frame that can take the market out of the initial balance, high and low. Otherwise, it's retailish traders that are just auctioning. I have no clue that that even makes sense, but I remember that. I remember hearing that. Well, not to point out the obvious, but we've had that happen once, twice already, so I wouldn't exactly get too excited, but statistically, we will take out one of these IB stats one way or the other. I mean, 97.3% probability, or whatever it is, 97.4% probability in this open type, we'll take out one of them. And not to put too fine a point on it, but 97.3 is not 100. I should have screen snapped that day that we didn't and marked down the date somewhere where I remember it. It was a couple, 3 Fridays ago. I don't know, 2 or 3 Fridays ago. Not last Friday, obviously, and I don't think the one before that, so it must have been 3. We did not take either high or low. Close the day out. And one of the things that I have no problem with is discipline, over trading, sticking to my thinking. So, like Friday, I didn't have a problem standing and watching that market fall off because it wasn't it wasn't a trade that I had planned on. In hindsight, was that stupid that I didn't just throw a short on there and go, screw this vetting process? I'm gonna get get a bunch of money here and get these accounts all into the XFA. Yeah, probably. Woulda, shoulda, coulda, Woulda, shoulda, coulda. She said. It is pretty interesting how they're just, well, I tell you, if you've got a mean reversion. Hey, Panda. Yeah. I'm gonna say hi to Antonio. Huh? Okay, there you go. Okay, now. Up and down, and up we go, and down we go. I don't know what the hell I was saying when Panda came in here with her demanding stuff. I suppose you could say we're auctioning out these distributions. My guess is, I don't really want to look particularly, but I'm liking watching for my signals here, but my guess is that we are we're auctioning these big disasters. That, well, no, that doesn't hold. Look at here. We're auctioning right here. Pretty much pretty clear what we're doing, huh? We're auctioning over the top of this higher distribution. We're not repairing anything. We're not revisiting any of these strings of singles, which is surprising, to be honest with you. I thought I was going to see us doing that. And this kind of brings us to the point of our monkey mind. That's something that's a real problem for a lot of traders, is their emotional, their side of the monitor is a big problem for a lot of traders. And I refer to it as the monkey mind, because you got to remember that depending on, I don't care whether you believe in evolution or creation, I think everybody agrees that the human Homo sapiens have been developing for a long time. And part of that is, the wiring is being cooked into our DNA, which through selective adaptation and time, survival of the fittest, whatever you want to call it, has reinforced that wiring. So, FOMO, fear, wanting to be right, revenge, needing self-gratification, to confirm to yourself that you're thinking right. That's baked in for thousands of years, man, and you're never going to get rid of that. Ever. what you need to do, in my opinion, and what I try to do, is be absolutely vigilant and continually aware of it. Aware of any of those possibilities. Tom over at TLab refers to it as Hyde, Jekyll and Hyde. Are you going to feel FOMO? Hell yeah, always. Are you going to feel revenge because you got stopped out and then it went the other way? Yeah, but the key is you don't act on it. Was I disappointed that I didn't get a trade Friday when I'm standing here waiting for it? Yeah. Did I chase it? Nope. Now, that's just me. So, be real. I think every trader needs to really recognize and be vigilant about their monkey mind, Be continually aware of those things, those adrenaline, things that are going to induce adrenaline rush and all that stuff, and be vigilant not to react to it, not to act on it. Don't be clicking that mouse. Just my opinion. Something to be sure. I mean, there's new people always every day, I guess, here. So, this is my virtual journal. Everything on my screens is captured, obviously, in the video. And the way that I get what I was thinking to the stream or to the recording is my voiceover. So, I'm talking to myself here. I'm articulating out loud what I think and believe. I'm not trying to tell anybody what to do. That's something to understand in case you don't. And this is the visualization of my backtest rules, which is rating system. Yeah, you're right there. Whatever my wife was cooking up that smelled great must be ready. I'm being summoned to the trough. And I like that. And we've been, I've been up and at it, standing here for 5 hours. So yeah, I've got every right. What else can I say and do here? We went through the monkey mind. We're pretty much running down the list. That's good. I don't know what to say other than the statistic is 97.3% of the days, looking back over 2,000 trading days, when we opened higher in range, the IB high or low was exceeded by price at some point in the balance of the RTH trading session. That's 97.3. That's not 100. So those are the stats. That's where we're at. Here you are, higher in range, 610 days, looking back at 2,000 days. 97.9, 97.9. Oh, I'm sorry, 0.9, not 0.3. 98.3 and 97.9. So there you go. It is kind of a funny day, isn't it? And something that I didn't know, haven't looked at since the open. Let's look at this. Well, we're still way high. We were at 300 and change percent volatility in the ETH. Now we're at $1.22 for this time of day in the RTH session. Our average true range is coming down sorta to normal. Cool. Have no signals to take. No trades or signals to take in my process of vetting the two IB trades. Now I'm at quite a dilemma here. Oh, here it looks like we might take that stat now. Oh, ooh. That food smells mighty good, and I'm pretty hungry. But this looks like, I don't want to be out there stuffing my face and miss a trade opportunity here. And I want to repeat that. I think it was 3 Fridays ago, whatever. Go look. We did not take either the IB high or the IB low, so that, 2.1% of the days, looking back at 2,000 days, was met. Now, what are we going to do now? Who's doing that? Who's doing that? Is there something going on? Hey, wouldn't you fully imagine that we would take one of these IBs out and likely the high? I would think so. I would certainly think so. In fact, I would suppose that it wouldn't be out of the possibility to get a short squeeze going. Funny how they're getting right up there and then bringing it back, aren't they? There's a bunch of different ways to look at this kind of price action. Some people look at that and go, oh, there's, here we got resistance, and we got 1, 2, 3 resistance here. This is really strong, blah, blah, blah. The other side of the coin is, well, we've tested it 1, 2, 3 times, and how many times can you beat on the bottom of a bucket till you knock a hole in it? So pick one. That's one of the interesting things about trading and all the euphemisms and the theories. You can make a valid point on either side. Always. 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 Here is another one of those VPOC migrations things that I've never been able to get around. I mean, I've never been able to identify the qualifying parameters in any kind of an accurate way that would be meaningful to trade. myself. Nobody in the, nobody could possibly miss this yellow line moving around. But if you went along here on the migration and you're stopped, if you wait for the pullback to here, okay, but what is that? Pull back to the low volume node, maybe? That, that's possible. And down here then you would be 87 to 92, so that would actually be the range requirement ahead of the level and trading to the POC. So if you look at it in a smaller time frame, it's outside in, isn't it? It's a smaller fractal mean reversion. Hey, I'm just, throwing them out there. I don't know. It's not something that works for me, but yeah. But it does for lots of people, I think. And that's great. That is the joy of trading. Sorry, I had the wrong screen up. Here's what I'm talking about. VPOC migration. There it is. Short move. That didn't work out. Pull back to these levels here. Kind of the low volume zone node, whatever. Yeah. That's a mean reversion, kind of, right? There's one. There's one. I mean, there it is, outside in, outside in. Looking at this smaller fractal as a mean reversion. And believe me, I'm not suggesting that's something I'm going to do, but I'm always looking at this setup, trying to figure what kind of a qualifying criteria could I use, and then, the next step would be to code up and backtest and all that. I don't want to use the term code up because I'm not coding like Python or something. When I look at the backtesting here in IRT, you'll understand what I mean, but you create the rules and you do use tokens and, if this, then that, if not, then what kind of thing, or if then else stuff. But it's not like Python or something. I think it's built on C++, but they put together, tools that allow guys like me to be able to do it. Now they're going to start getting into a period of time that's my resistance is weakening to the smell of that food, so I've also kind of changed up my daily schedule a bit. Usually I would take a break about midday and rest or whatever else, and now what I'm doing is trying to take care of my eyes a bit, get outside, get some UV, focus down on long distance rather than clinched up here on the short focus muscles. And at the same, in so doing, I go for about a 4-mile walk here around the neighborhood, and then takes about an hour, and something that's really important to remember is the most important critical piece of equipment you've got in your trading business or your office is on your side of the monitor. If your brain is scattered, you're not well rested, hydrated, fit, healthy, you're on emotional tilt, push that mouse away, man. That's like saying I've got, my internet's falling in and out and I've only got one monitor working, but hell, I'm going to trade anyway. That's stupid. None of us would do that. But the most important thing you've got in your trading, equipment is you. Your eyes, your brain to make your decisions. So remember that. That's a real important thing to take care of. And one of the big ones that's bothering me, so that's why it's on my mind, is eyes. When we stand and stare at these screens for so long, first there's the blue light and all that stuff, and then there is the short focus muscles in our eyes are clenched, focusing on these screens hours at a time. Clench your fists as tight as you can clench them. And keep them that way for an hour. Tell me how you feel. That's what you're doing to your eyes. So every hour, in my case, on the lunch, middle of the day, get outside, soft focus, look down the street, look across the prairie, wherever the hell you are. Poke your head up out of the hatch and look out across the water if you're in a boat, whatever. Get a little natural light, a little bit of UV is good. And rest those short distance focus muscles. It's really important. And of course your health, Boy, you'd have to think they're going to get that IB high one of these trips up here, wouldn't you? 1, 2, 3. There we go. Now we got it. Okay. Now we get over here. Huh? What happened there? Oh, interesting. Okay, let me point out this right here. This did not throw an A signal because the close is exactly on the IB high. The rule says for the signal, the low is below the IB high and the close is above it. You're lucky. Oh, got a fish for mom, good boy. So there's no A trade. There's no A signal here. Bear that in mind. I am. Wow, that's disappointing, huh? Been waiting here for however many friggin' hours and nothing gonna happen now. Maybe. So I don't have an IB trade, either in any way, shape, or form, yet. There's a trigger and there's all this silliness, but there's not the signal. And I have to stick with the rules. Do I think that maybe I need to change that rule? Maybe, but I need to do that as a series of what ifs with the backtesting, and certainly not during the live trading session. There you are. Well, we have taken the IB, statistics, so the 97.9% probability has been satisfied. Will this turn out to be an IB failure? Perhaps. If you just think about it, the grand scheme of things, it wouldn't be out of the possibility to get a squeeze on, would it? Now it's possible that I will get it. Nope. I was going to say it would be possible to get a signal, but no. No-go showboat. Right over here. At one point we were up there, and there could have been an A thrown, and now it's doing this number. I can't. So I'm gonna grab some water, see what that smell's all about, and I'll be right back. Man, I'll leave you guys to take care of this market. And what do you do? Nothing. Let me explain something else here now, in case you're going, hey, dummy, there's an A. No, there's not. Again, the code is, the thinking behind it goes like this. If this would be an A bar, absolutely a signal bar. Open is lower than the IB high. Close is higher than the IB high. However, the rule further states that the bar preceding must have an open lower than the close, and the high must be lower than the IB high, and that didn't happen, so there's not an A signal. There you go. And yeah, I'm going to be mega pissed if it takes off with a squeeze, and I'm not wrong. But I have to follow the rules. Otherwise, the trade cannot be included in the data set for vetting because it's different. When you're vetting a trade or a setup, you have to use the exact same criteria. Stop, loss, trigger, all that stuff has to be exactly the same. Otherwise, you can't include that trade in your data set. Now, I will also say that in a previous rules that I had used, this would have been a valid trigger. We took the IBI out. We dropped back into this consolidation zone, or you could look at this as a bar trade, and then we didn't get anywhere and continued on. That would have been a signal. But in the current situation, damn it, sorry about that. Right here and up. In the current situation, it's not. And what are we doing now? Well, now we're in the B range. We don't have an A, so it's not valid. But like I said, once again, I'm going to be pretty thoroughly pissed if I don't get any trade out of this. These are the situations where you got to really recognize that monkey mind. And have a predefined trade plan for yourself before the trading starts. And then stick to the damn plan. You know? And one of the things that's, there's somebody said something, there's a news pop right there. Unrecognized critical risk, unexpected potential, there you go, critical risk in motion. What I was saying on the forgetting to push the mute button to turn it off was, in my personal opinion, the more you keep it, the KISS principle involved, the better off you're going to be. I'm going to be, because the more convoluted and, branch ideas and what if stories with the trading rules there are in the plan, the less likely that plan is to work for me. That's why I have basic set of rules and I'm sticking to them. You can, if you have some sort of a thing where you don't have an A rule, but you get 3 B's in a row, then you know what I mean? Come on. But, what I'm saying, usually that all boils down to rationalizations and justifying stupidity. I should say justifying breaking the rules or not following the rules, and in my opinion, that's stupidity. Yeah, look at that. Now, if you want to be real old school about it, that's about the cleanest 3-bar reversal I've seen in a long time. And they got up and took out, or damn near took out, that overnight high and then didn't, and now they're coming back down the other way. So I'm assuming that Tweets R Us is up to something over here. My guess. Here we go. There you go, 1122. Wow, isn't that funny? China issues implementation rules on port fees on U.S. ships. I'm telling you, be really, well, I've said it so many times I'm sick of saying it, but I'm not. Random risk has got nothing to do with the administration, apart from the fact that all around this tariff story and these, random things is the majority of the instances, but it can be from anybody, anywhere. You have to be continually vigilant about it, and you have to, in my opinion, only expose your account to market risk for A+ setups. And that's me. So maybe now is a good time to approach a little bigger picture here, and that is treating or establishing your own or creating your own, whatever you want to call it, trading business as opposed to a gambling or a video game or whatever else. There's a few things that I believe you've got to accept. And these are not just epiphanies I had. These are all, I'm just stating facts that have been recognized and followed by the most successful traders and hedge fund people in the world. And I mean Ed Thorpe, Paul Tudor Jones, Jim Simmons, Ray Dalio, Tom the Trader, the best loser wins guy, Tom Sosnoff, on and on and on. So here's the way it works. Trading is a random environment. There are millions of people trading, and millions of inputs can affect where price goes. It is a random environment. The outcome of the next trade or price movement is 50-50. It can only go up or down. It's binary. We put time on it, but think about it. Price can only go up or down. It can only tick up or it can only tick down. That's it. It's binary. For you to imagine that with millions of random inputs, you can predict where price is going, I don't think that's probably a good thing to try to do for your, psychology. You can anticipate where it's going to go, what might happen. That's different. So how do I approach trading as a statistical business of probabilities or a successful business of probabilities? Well, I've been talking a lot this morning about the IB trades and my vetting process. So what I believe you should do is identify one setup, whatever that may be, and the criteria which validates an entry for that setup. And obviously you want to pick something that happens frequently. You don't want to pick something that happens once a year. You know what I mean? That ain't going to work out very good. That's why I chose the IB setups. They were obvious. It was pretty well known, but I'm vetting them for myself. So what do? Well, the setup. It's the IB, high or low. The statistic is taken, and then you have two opportunities, an IB continuation or an IB failure. And you establish the criteria that validate an entry for either of those or any of those. You then capture either live with some sort of charts gizmo like I've got going on over here, or backtesting is the best. You determine whether that setup and those criteria have a positive edge, an expectancy, whatever you want to call it, or not. If they do, then you rely on the law of large numbers, and you take that setup and those criteria every time they present themselves, and you lean on the law of large numbers to manifest the expectancy to your account. If that sounds familiar, it's exactly the business model of a casino, the gaming industry from the point of view of a casino. And I don't guess anybody will argue with the fact that most of them are profitable. They don't play any game which they have not predetermined as a positive edge or an expectancy with specific rules. Then on the casino floor, they play that game. Their mission in life is to play that game as many times as they can in 24 hours. They know that gamblers will win. They know that there may be streaks of gamblers winning. We know we'll take stops. We know that we may have consecutive occurrences of stops. That's what you have to identify. And then, for example, IB trades. Okay, what are the, over looking back over 500 days? What is the probability of profit? What is the expectancy for a winning trade? How many losers did I experience consecutively? Can my account risk parameters stand that group of consecutive losers? Now, there's a couple things that are important. You want to make sure that your data set that you use is statistically significant. That means that it is enough occurrences to be outside the probability of random distribution. If you flip a coin 5 times or 10 times, I don't think anybody would be surprised if you got more heads than tails. And that's random distribution. So you need to try to have a data set outside of that. At least more than 100, the more the merrier. But all the rules have to be exactly the same. Over 500 trades, I had 60% of all those trades achieved T1. However many achieved T2, however many achieved a scratch, however many got stopped out. But it has to all be the same. If T1 is 5 ticks this time and 20 points that time and something else the next time, how can they possibly be compared? They cannot. So that's really important. Now, what I'm doing, and I'm getting fairly successful at this point, is the backtesting. And that's the way I believe is most efficient to do this. And that goes like this. Here's the chart we've been looking at. And these lines are just indicators I created, built, whatever you want to call them, to accurately identify each one of the rules in the trade system for the IB trades. These signals are also these signals. They're not connected, but they are identically the same. These visually represent identically what's going on over here. Now, with the backtesting system in IRT, you have to set up a complete set of rules and instances for long and short. It's not like the convenience of multi-brackets in Bookmap where you can set up one stop, and then one T1 and one T2, and the system is smart enough to know whether you're short or long. It doesn't work that way over here. So, how do you backtest? Well, there's 2 things you can do. You can send your backtest example or results to the chart, which I do not want to do. But the way to really backtest it is right here. This is looking back over 500 days. Let's do this. Let's go back over 100 days. No. I was thinking I could do that. 100 days. ES. Ooh, see there? Don't want to do that. 2 contracts. The RTH training session. The reports that I want. Okay. Now let's do something else. Let's do it even less than that. Let's go back over 20 days. Come on, you son of a bitch. There you go. Now watch how long it takes me to backtest each one of these rules over every 1 minute bar in 20 trading days. It took 1 second. There's the profit. There were 30 trades. 14 were long. 16 were short. And then all the rest of the data. Here's a good one. I know that this is incorrect because it is a one particular day which did not fire T2 properly but went to the end of the day, which I'm not sure exactly why, but everything else about the trade was correct. The maximum profit winning trade should only be $750 because that's 2 contracts achieving both T1 and T2. Maximum or the largest losing day or stop is a full stop, 300. That's great. That always holds, and that's really important to me. What did we have in this situation? Well, we had 30 trades, 13 were winners, 5 were losers. We averaged a 2.41 R ratio. In other words, the risk-reward ratio is 1 to 2.41 points. The way IRT calculates the win rate is it says 43%. That's because it takes 13 winners of 30 trades. In my opinion, that's not really very valuable or accurate because IRT is wasn't designed to do multiple contracts and scale outs. In other words, having scratches. So we have 13 and 8 is 18 contracts here, or 18 trades and 30 trades. That means that 17 or 14 of them, or whatever the difference there is, was a scratch. So what I believe the thing to do is that you take 18, you have a total of 13 winners and 5 losers, then your win rate, not your scratch rate, but the win rate is 13 divided by 18. That's pretty good if I'm not mistaken. Come on, man. Well, this thing is really arguing with me a lot. Don't ask me why it's doing all this jumping around. This machine updated to some new version of Windows or some bullshit. No, it doesn't want to do things. So it's 13 divided by 18. The win rate is 72.2% win rate. Because the difference here, for everyone, the difference between, 18 from 30, that balance is scratched. There's one win and there's one loss. They zero out. So in my opinion, this is correct. The win rate of 72% at 2.41 R value. And then, if you really want to get to the bottom of it, which you should definitely do, come on, you can go down here and you can look at every trade. There's that one that got there's the one that got the too high right there. You can look at every trade, the date, the time, the trade type, and what was the outcome, and what are the values. That's how you do a real back test and find a real statistic about your trade, in my opinion. Now what do you do? Well, here's the beautiful part about it. That was 20 trades or whatever, right? That was 20 trades in 1 second. Here's 500 trades. Same setup, 500 trades. How long is this going to take, do you reckon? Took 5 seconds. 5 seconds to back test every rule over every 1 minute bar, looking back over 493 trading days. Now, I don't know how old you are, but I'm old, and so I would probably never be able to do this in my lifetime, or unless I turn out to end up being Methuselah Jr. over here. But can you spend this amount of days to validate a setup? I sure as shit can. There's the 704 trades, long, short, profitability and all that. Come on. Profitability, the number of trades per day. Here's something I wanted to point out about our conversation earlier. Okay, there's the losses. They're correct. I know this day right here is the 1st of May, 2024. For whatever reason, it doesn't fire T2. It goes on to fire at end of day. So this should be $750. And the total gross profit should be reduced by whatever it is, $2,300. Why, I don't know. But here's something really important. Remember I was talking about your account risk tolerance? Well, here we have 9 winners in a row. Here we have 8 losers in a row. And your setup and your account stand 8 times 300, because that's how many dollars you lose for each stop. Can you stand 8 of those in a row without A, freaking out, or B, blowing up? That's the kind of data that you need to have in order to be able to understand and make a decision if you've got a good trading system or not. And the same goes for the trades. You can go back and look at every one of these, wherever they went, every one of these 704 trades. And it goes back to the 9th or 10th of November 2021, I think, or 20, something like that. Well, we can look, actually. It was kind of funny. A few days last week, it was my birthday. It went back to my birthday for what? I figured that was, a sign from God. Kind of like the YouTube video. If this video finds you, you're going to have $1 million in 10 minutes or whatever. Just snake oil salesman taking advantage of people's desperation, man. Oh, 23. 13th of November, 2023 at 10:17 in the morning, this system entered an IBC long. It got T1, it got T2. And there we go. And you can go all the way down the list. That's backtesting. Now here's the next thing. To take it one step further. To really and truly, I didn't mean to do that. Really and truly accurately determine your whether it has a true edge or expectancy or not. And the way you do that is you set up your backtest to look at all of the data up to, just pick a day, up to the end of 2024, the last day of 2024, and you backtest it. And then you can optimize that backtest over that data, strategy over the data. And once you have optimized that backtest strategy over that historical data, you can do a forward walk, which means you can take the optimized strategy and run it over untested data. In other words, the 1st of January 2025 through today. Now you've got a real optimized, and remember that it is a strategy with a 50-50. The probability of the next trade is 50-50. Doesn't matter. But that's how you do it that is backtesting, and that's what I'm up to here. Go parse yourself up to somebody else. And okay, so we have all of that. What I was going to say about these rules, and when I say coding, I don't mean that. I mean, for example, here's an entry. Well, that's not a very good example. Let's pick something, I don't know. Let's pick this. Let's look at a short or a stop. That's a good idea. This is what I mean by coding. Now, that's not really code, and it's using these tokens and things that I've set up over here. And that's what I mean when I say that. And, user variables and all that stuff. So it's not like Python, for example. You do that here, and you code one rule at a time, and then that's how it works. All right, that's my my shtick on the backtesting story. And here we are. Now you know the history of this. You know why I have this up. You know why I haven't taken a trade. And you know why I'm so damn good looking. I always used to say, I wish I was born rich instead of so damn good looking. Then I woke up and found out I was left out completely. And I want to repeat a couple of things for the, umpteenth time. This is my approach to trading. I'm establishing my trading business. And I'm sharing it because I hope it helps somebody. Anybody. Or is funny or entertaining or whatever, And by the way, click a thumbs up and a sub. That'd be great because that's all I get out of this. All of this cost and equipment and everything is mine. And I'm not, monetized in any way by YouTube. Oh, and another thing I forgot to say, I think pretty definitely, I stream 1440p high def. So if you're not catching real crisp high, clear high definition stream, do the gear and then select that. There you go. Yeah. And we have not backtested. We have not achieved any backtest rules yet. They haven't fired. Yeah, we've had a bunch of them fire, but tell me if you see an A here anyplace. I don't. And that needs to be, we need to have one of those. Now here, this, as I explained earlier in the stream, would have been a potential A signal, as would this one. No, it wouldn't. But it is not because of the previous bar in this case, and this one closed. This one's close was right on the IB high, and the previous bar doesn't qualify. So, And if I want to change those rules and think, it's not, maybe I need to change those qualifiers, okay. But absolutely not during the trading session, period. And not until I've changed those rules, as in what ifs, and backtested them to see if it makes sense or it doesn't over a large data set. This is statistics, statistical probabilities. Mark Douglas, Tom the Trader, Tom B, Rod, me, pick one. just to kind of throw out there now, I share these session prices freely to anybody that could use them. They're pushed automatically from my IRT real time from 1700 on Sunday night until 1600 Friday. And there's a lot of people that use them. It comes in, I share it in the form of a CSV, a link to Google, and it downloads a CSV file, which you can use on your wherever, you know. Also, if you have IRT, happy to share the definitions of this chart that I've got, the backtesting one or whatever. You just, you know, like, subscribe, and throw something in the chat, and I'll hook you up. Well, there's that overnight high. Oh, I can't even talk. There's the overnight high. And, you know, I have no trade here, which is frustrating, but that's trading. Now, I'll tell you right now that having one vetted trades and sticking to the rules is freaking frustrating, you know? But I believe that's the secret to long-term success. And that, again, it's not some epiphany I had in a dream. It's from the feedback of the best, most successful traders in the world. I figure that's, you know, who would I rather emulate, them or some jerk off on YouTube or Twitter or somewhere that's, you know, brings me to another real important an important point. Let me see if I got my time thingy all set up here. Yeah. And that is that hold on, waiting for the top of the hour there. Trying to get these timestamps so they make sense. Okay, so here's something that's really important to do with internet dickheads and influencers, gurus, etc., win rate is absolutely BS clickbait crap when taken by itself out of context. All of these, I've got a 95% win rate, all this crap you see on YouTube. I don't go to any of the other places like Facebook or Twitter, that crap. I don't do those things, but on YouTube, for sure. I can have a 95% win rate and go broke in 10 trades. What matters is your risk to reward ratio, or your R value or R ratio, whatever, however you want to look at it. That's the important part. Now, win rate is a component in calculating your expectancy. So in that regard, it has a value. But these guys that make a big deal out of win rate and never say a damn word about their R value are just clickbait lying to you. Simple as that. I don't know how to, well, it's just a warning, take it or leave it, I guess. Now, the way you calculate expectancy, and that is meaningful, you capture a statistically significant data set of that exact trade setup and those parameters. At least 100 trades, and the more the merrier. I just showed you how to do 500 in 5 seconds. Now you can do something. So expectancy is, over that sample set, the following formula. Win rate, here you go, win rate times average winner minus loss rate times average loser. That is the expectancy. So over whatever that was, 704 trades, if I did that calculation, I would say that my expectancy was to hopefully win, X amount of points over 700 trades per trade. You can also, R factor is an easier way to look at that, I think, and maybe easier for some to do in their head or whatever else. And it's real simple. Your stop is 1 R negative. That's your risk. R stands for risk. Okay. And your risk reward ratio is, for every 1 risk increment, whatever that is, for every 1 R, how many positive R's do you have? In my case, it's 2.46 on that back test that we just looked at. Or in my basic risk neutral bracket, what is it? Well, here's the R value. It's 12 ticks, but there's 2 contracts. So I'm risking 24 ticks. And I'm risking 24 ticks to make 60 ticks. And that's about 2.5 times. That's the R value, or R ratio, whatever you want to call it. Those are really, really important. I mean, if you're going to try to be a success at this business in any way, shape, or form, you got to know that stuff. And, am I disappointed that now, like I said before, my old standard IBC setup with just one liner from before I did all this multiple rule thing, here would have been down. I would have taken it here. I would have gotten scaled, but I would be stopped out. Would I have taken it again? I don't know. And now here we go. You see, that's always the problem. Did I know right here when I got long that that was going to happen. Yeah, you're right. If I took that trade, it would have been scaled, and it would be a risk neutral or a scratch. Then what do you do? You know, that's the difference between rear view mirror traders, typically the RTH, you know, the guru-y guys, people that don't trade live, that are always looking in the rear view mirror and going, well, we did this, we did that. I can do that. My daughter can do that. The point is, trade on the hard right edge, and let's see what you can do. Where's price going right now? My entry is 3. If it goes 3 points my way, I'm scaled. If it goes 3 points against me, I'm scratched. Where's it going to go right now? Now we come into the 12 o'clock zone over here. And what I've started doing now is that I will go out and go for a 4-mile quick one. Little health, little something. I used to do 12 or so miles every Sunday. But I believe it's better to do every day a shorter distance. Not to mention fresh air, rest your eyes, do all that kind of stuff. So keep your eyes open for whatever. By all means, manage your risk. I'll leave the computer on here. Here we are. Pretty funny how small the trade range is in terms of ticks today. Low volume, I guess. Oh, that reminds me. What do we have for volume right now? Yeah, we're still at 120% for this period of time, or this time frame. And we're at about 5 3/4 in 5 minutes. I will leave these like that, and the YouTube or the book map visible, and I'll fire up some different music here. Oh, I don't. What happened to that? Fire up some different music. Come on, God, boy, I don't know why this is doing that, but it's really irritating me. Well, we got talking feds and talking China, and I don't know where Trump is, but he's, of course, talking. I think he's probably in, judging from what I see here, he's probably somewhere around Israel, I guess. Don't know. Nothing going on there. Let's go there. All right. Oh, man. Oop. Okay, what happened? Oh, gosh. Okay, well, there we go. What happened here now? Are we rich yet? Oh, we got an A. Look at there. We got an A. Well, it never fails when I'm gone. Well, we got both, actually. We got an A, got a B, we got a down trigger, which would have been a loss, a stop, and then we got an A, a B, a long trigger, and so far that would be working out great. Oh, I'm so pleased. Man, I'll tell you, you can stand here for days, I think, and the minute you go do something else, all hell breaks loose. Oh. Okay. My sojourn over here now. And I was talking about, well, we got an A signal, we got a B signal, we got a trigger. We got stopped. We got an A, we got a B, we got a trigger. Scaled, damn near profit, damn near the whole way. I'm not sure, I have to look. And here's something that I noticed last week. Come on, IRT, wake up. There you go. Here's something that I noticed last week. I'm going to have to add a rule to the system. I'm thinking, let me rephrase that. I'm thinking about that because last week I did not take a trade discretionarily, if that's even the right word, because it was against context, and I would have felt the same way right here, because context is up, and I think I would have. I think I want to figure a system, a set of criteria that will only go, for example, along or nothing when context has been repeatedly up or down, and if you know what I mean. I don't want to trade counter context. That's a big no for me. And so this trade would have been, now it would have stopped, no question about it. But the A trade, and this is strictly rear view mirror trading. I'm not making any suggestion that this is what I did or anything else. I'm thinking out loud here as to how I can further refine this. A trade. B, trigger, in context. And I mean context from the day. I may just be whistling Dixie here, I don't know. I need to think about it. Because if you look at this, you know, if you just took every signal today, there would be a stop, nothing, nothing. Oh, wait. A short, stop. So there would be two stops and now one long, which I think, let's just see. Where's the trigger? Would have been 98. So we need to get to 98, 108. We need to get 100 to 110 up here for the target. Not the case. So here would be a scale and a stop. So a full stop, and a scratch. Not very good performance. Okay. Now we're cooking. And this damn thing is not right either. So here we are in the decision point for another potential IB failure short with an A and a B. And what do I think? That is an extremely good question. What I think is the context is up, I think, isn't it? There's the blue boy. There's the open. Not my trades necessarily, well, at all, but these mean reversions have been pretty snappy. What's going on in the La La Land? Funny, isn't it, that we can have any kind of thing we want, but anybody else is wrong? We've aggressively pushed back against China's export controls. This whole thing started by us imposing tariffs on everybody, if I'm not wrong. I don't know. It seems like America's kind of fallen into that everybody in the band's out of step but us mentality, and I don't think that's got a positive outcome written on it. I don't think. Well, there's a sell-off, and no, boy, look at there. Look how close we got within a tick or so of the trigger. Close only counts in horseshoes and hand grenades, right? I'm going to mess around here and be the power hour pretty quick. And then we're going to be at the closing of the stream. Ooh. Well, let's see. It's 29C out there. That means anything to you. It's 85F for you F'ers in the crowd. This was a pretty good day for anybody who had vetted and was trading a mean reversion. Just looking at it in 100% rear view mirror hindsight here. This is why I think using the rules and why I'm such a stickler about both the visual and the programmatic rules in the backtesting, because it's too easy to fudge when you're going back looking, you know, too easy to fudge. It would be too easy to say, oh, well, this one got up, you know, this one met the criteria. No, it did not. If you didn't have these hard, fast lines and rules in the code, you could say that, and you would, you know, look like a genius because basically you shorted the pullback and down you go. But that did not meet the criteria. Does the criteria need to change? Well, once again, yeah, it may be. But the only way to discover that and to determine that is to do a series of what ifs in the backtest, just like I've been doing for some of the guys in Static. Okay, let's see what happens if we do no risk neutral scale and we have all in, all out at 36 ticks, for example. How does that work? Or, you know what I mean? Pick an option. In this case, I could say, okay, or the trigger is, instead of 1 point, the trigger is 1.5 points. That means this would have been right. This would have been triggered. But in the middle of the trading day is not the time to change the rules, in my opinion. And we are at the world famous 1400 power hour. Don't ask me why they call it that. I don't know. I'm going to have to Google it one of these times. Every time I say that, I think of the caveat, and then I never bother to look it up afterward. Well, I think I've just maybe it's a good time to point out that trading is a zero-sum business. Trading futures is a zero-sum business. And what that means is, by the nature of the instrument and the way they're built, they are sold in contracts, and a contract is between a buyer and a seller. There is and can never be more of one than the other. It's impossible. Every contract has a buyer and a seller. The way the market goes up or down is aggression. The market goes down because sellers are aggressively crossing the inside market and hitting the bid. Price goes up because buyers are aggressively crossing the inside market and raising the ask, lifting the ask, whatever you want to call it. That's how it works. Now, take that one step further and think about it. For every one of these trades that was made here, every one of these sales short, what happened? Somebody is on the other side of that trade going long. How would that person make money? Well, they'd bring the price up here. That's why the old saying, the market goes down to go up and goes up to go down in futures. That's exactly why. And in my opinion, it's higher time frame has taken the other side of all the trades, because do you have the money? Do you have the money to sell to buy a bunch of contracts from guys that are selling up here? To take the other side of all these trades and then hold it? Because they don't lose money. Goldman Sachs didn't buy a bunch of contracts up here and are, panicking and getting out down here at a big loss. That's not how they work. They can hold that inventory and then wait till they get enough inventory on hand, and then they take it the other way, and all of these stops start firing, and up they go, and they're making money the whole way up, or vice versa. That's how it works. That's, it's important to recognize that, I think. The market goes down to go up, goes up to go down, goes down to go up, goes up to go down. What's it doing now? Look at it however you want. And it may, there may be an overreaching direction up and to the right, is pretty much the way equities move. But through that, all that way, there are traders that are selling it on the way down, and then they let the stops run, and up they go, and vice versa. So let's see what else we got going on around here. How's our volume doing today? Yeah, we're holding our own. We've been holding right at about the 110 area plus all day, so they're consistent. The average true range for the 5 minutes pulled back now. Look at that. overnight. Oof. At a 1.4% change positive here on the ES, which isn't hard to do after that giant mess of Friday. It's so funny to me how there's such a big thing and then nothing. Not another word. And there was no corroborating evidence about these letters that were supposedly circulated or what those letters said or any reports from any other countries in any of the major reporting that I look at, which is Financial Times, Wall Street Journal, Bloomberg, BBC, and at last, usually absolutely last, CNN anymore. But, you know, that's 5 of them. You'd think somebody would have said something. After a 221 or something like that % sell-off. What was it? 227.7%, 75 point sell-off on Friday. You'd think somebody would have said something. And maybe they did, and I'm just not seeing it, but I find that so weird. It makes me think that it was potentially contrived to give, stop and think about it. If you've got a bunch of guys that want to load up on stock or on something and you have the power to dump the market and they load up and everybody's happy. And there's been no further noise, nonsense, or backlash about it. That's the part that I find suspicious. And maybe it's just because I've been around these news cycles now long enough in the recent couple of years to be conspiratory, if that's a word. I don't know. I don't really know. Anyway. So let's have a look at the backtesting idea. And I'll explain what this is all about. This is my backtesting visualization chart. These rules and lines and levels and signals don't hook up or connect to anything other than this chart, but they absolutely accurately represent the rules and the signals in the backtest in the system, my trading system. This is strictly for me to visualize and make sure that the things are happening as and when I expect them to. I've got to keep an eye on this now, because if this gets up here, that will be a trigger for a short. Well, would that be a good idea? It would be kind of counter trend, wouldn't it? To me, but let's keep going. So these are the backtest rules for the IB trades. There are 2 trades, a continuation and a failure for each IB high and IB low. These are the individual rules and the various other components that make this thing happen, and the way it will run through every minute bar, every rule in it over every minute bar, and it is trading a 2-lot risk neutral package, the same as I have set up on Bookmap. 3-point stop, risk neutral scale. T1 is 3 points positive, and then 48 ticks is T2. And the way you do the backtesting is, which is what's so phenomenal, in my opinion, there's 500 days, you know. How long would it take you to manually backtest? Well, first of all, you want to trade 500 days and expect that you get 500 of the exact same trades that you can take every day? And how long would it take you to do that accurately? And this is how long it would take you to backtest it. Five seconds. It analyzed 493 days. It took 706 trades. 368 long, 338 short. I think it's phenomenal. I mean, this is how to backtest. I've been struggling with these IBC trades for a while now because I didn't have this sequential rules coded and working properly. This is an error right here because it is reflecting the 1st of May 2024. For some reason, it entered the trade properly. It's an IB failure trade. It entered the trade properly. It takes T1, and then rather than taking T2, it stays in the trade until the end of day signal, which, you know, was a pretty big mistake if it happened in real life, but it's not what I'm interested in. So this needs to be, the maximum trade size should be $750, and you need to take the difference between this figure and $750 and subtract it from the total. And I can't figure out why I've sent a ticket to IRT. And it's not that big a deal, I guess. What's really a big deal to me is that the stop losses are never different or more than they're supposed to be right there. $300. That's for a 2-lot, 12 ticks. There's 2.22% profitability or risk to reward on this group. And there's the total number of winners, total number of losers. And then this has got a 35% win rate. But I don't believe that's accurate because this report was coded for all in, all out. So in reality, there's 449 and 249 and 216, which is 465. There's 465 trades minus 700. The difference there is scratch. 1 loss, 1 win, which I don't think needs to figure in here. Maybe it does. I need to talk to some, think about it from a statistic point of view. If that's the case, if I'm correct, then it would be 455, 249 divided by 455, which is like 75% win rate or something like that. Anyway, and then if that's not enough for you, what's always important is to go to the very trades themselves. Come on, stupid thing. Come on, memory. Catch up. Come on. Good memory. No, come on, RT. Just work like you're supposed to, please. I don't have time to stand here. Think about this. These are all the rules. And then sooner or later we're going to get down here. I promise. He doesn't like to do this backtesting crap while the market's moving. Oh, come on. What's going on here? What's going on? Stupid thing. There you are. So this is every trade from the 11th of November 2023 at 10:17. We went long and we took a T1 and a T2, and there's the profit. And every trade, 704 trades or whatever it was for 702 trades since that date is right there. You can chart and confirm each and every one of them. And then on top of that, you could do a optimization and then a forward walk. So it can be really quite accurate and pretty darn, well, I'm not one to make a statement about professionalism or not, I guess, but it seems to me to be I would say that it's a hell of a lot more industry standard and professional kind of than, say, somebody whipping something up in Python, I think. But I don't know, and whatever works for you, great. But this is how I backtest, and this is what I do. And that's where this chart came from. This is a visual representation of these rules, and that's it. Now we're going to round the final curve here in a few minutes, and I'll go through the recap. And thanks a lot for hanging around. It's nice to not just be here by myself. Oh, now here we're going to get a trigger pretty quick. Yeah, we got a trigger. See that? We got a trigger right there. So we had an A, B, and a trigger. And now what do? Now do I take the trade? Or am I a little apprehensive because my general feeling about the day was that we would have a up day rather than a down day. Also, what have I got? I've got the IB high. Well, that meets the range requirement. I'm at a real crossroads right here as to whether to take that trade or not, frankly. And it's also, I have a kind of a rule of thumb, I never enter anything after 2:30, and we're awful close to 2:30. I don't know what to do, frankly. I don't know what to think at this point. What have we done? We've rotated up here. I think they're going to squeeze it higher. I don't think I'm going to take that short, to be honest. Now, this is where discretion comes in and maybe isn't any good. It's important to realize that this whole backtesting and trading idea is a work in progress, right? So, do I think these rules need tweaking? Just like I was talking about that context filter, somehow or another. We've got higher lows and higher highs. And now we have a VPOC shift up, another VPOC migration here, kind of. All right, so had I taken the trade short on the trigger, I'd be scratched and scaled. I don't mean scratched, I mean scaled, which would be fine. And now I'm going to be disappointed when it goes on to my targets. But you see the point. That would be 97, 87, need to get down to 85 down here in order to have my profit targets. So let's keep an eye on that. Okay, well, here we are. I'm not going to be too concerned or upset about this, and here's why. Higher lows, higher highs. Mean reversion. I'm not at all upset that I didn't take that. Purely by discretion, that I didn't take the signal right here. Short. Because it wouldn't have been a very... God, I hate doing this. It's so irritating. And now we've got a new A, right? Okay. So this is the kind of stuff that happens this time of day. All right. Well, here we go, boys and girls. So let's take a zip through the roses. I'm trying to return something here on another machine, and I'm all upside down and discombobulated here. I'll just keep plugging along. Let's go with it. Let's go with the important stuff first. All right. That's trading. All right, here we are. You can see what the day was like. There's our open. There we are. Slight skew to the upside. Here's the open. And here we are. After the giant whatever that was that happened on Friday, I have my conspiracy suspicions, but you know, in the real world, it is what it is. It happened and it's over with, so there you go. Okay. Market profile. Micro composite. Definitely gonna have an inside day, looks to me like. Micro, this is the NQ and the ES. We've been watching the backtesting enough that I don't think we need to think about that too much anymore. And here is our volume has been holding pretty steady all day, so that's encouraging. What do we have coming up? Well, oh man, it's irritating. Let's look at tomorrow. We've got Fed Chair Powell speaking at 11:20. And let me be sure and point out to everybody, in case you're not aware, earnings season has started with the financials. Much as I hate to even bring that up, but it's the truth. For the week, we've got Fed Powell. Not much on Wednesday. I mean, there's always the API inventories. Thursday, Philly Fed, PPI, retail sales, crude. More like the old standards. And here's the one that's got me fingers crossed, non-farm payroll on Friday. Now this will be 2 Fridays in a row. It was supposed to be the first Friday of every month at 7:30. That was canceled because of the shutdown. Last Friday was canceled because of the shutdown. What will happen this week, we don't know. Will we get any of our other governmental stuff? We don't know. But that's where we are for reports. This is, by the way, investing.com, which is free. You can filter it however you want, country, time zone, etc., etc. And this is Financial Juice, which is also the free version. As you can see here, they're continually honking you to buy one, but that's what it is. It has a similar docket over here on the left, and then more of a squawk box deal going on the right here. This is where we will see the market on close imbalance. I'll point them out at 1450. And that's kind of where we are. Sort of in the hold here. And then we have the market on close imbalance, and oh boy, oh boy. Remember that the stream starts every morning at 0800 Central Standard Time. It is my virtual trading journal. Everything that I'm watching is captured on the video, and my voiceover here provides insight as to what I was thinking. The idea is so that I do not have to be screen snapping and typing and doing all those things for journaling, which I believe is important. Plus, it provides a completely transparent and fully accountable record, permanent record, of everything that goes on in the account. There's no trade taken off the account, and that's why the streams are so long, 7 hours. And also, you'll notice maybe, or you may not have, I stream the entire monitors, not just the application. So anybody can see the programs that I have open or available at the bottom here on the taskbar. And there's the hours, minutes, and seconds on the clock and the date. So there you go. I stream in 1440p, so if it's a little blurry or something on your end, hit the gearbox on YouTube and select that, and you'll be pleasantly surprised at the quality. say I'm not monetized in any way. Likes and subs, great. Put something in the chat, also great. If I push and share freely these session prices, if that would be helpful to anybody, just drop, like, subscribe, drop something in the chat that you'd like the session prices, and I'll hook you up. I share them with a lot of people free, no problem. I start pushing them at 1700 on Sunday night through 1600 on Friday afternoon, 24 hours, full time. I think a pretty well explained book map till I'm blue in the face, but this is the dome, obviously. The high volume or the micro composite column where I entered these values manually, and then the high and low volume nodes are automatic, pushed from my RT. This is the full session volume profile, which started plotting at 1700 last night and will continue through 1600 today. The RTH session volume profile resets at 8:30 every morning. And this is my notes column, where I first thing in the morning, I determine what open type we'll have, change the context or the title here of the column to that, clear the notes, and then input all of the statistics associated with the session prices, which are here and come from Bookmap. There's no indicators on my Bookmap or my IRT. There are only the POCs for both ETH and RTH. And the POC is just the marker of the price at which the most contracts have traded so far in the session, period. The IB high and the IB low are also not complicated or mysterious. They are just the high and the low of the first 1 hour of the RTH trading session. Then we have the session prices, which are just self-explanatory. Boop, and there you are. These lighter areas represent resting liquidity in the book. Here's 187 contracts at the 80 handle. These levels here are just driven by the same data as the flags, except for 4. The continuation RTH high and low, and the pullback high and low for both the IB high and the IB low are representations. I mean, they are the data pushed from the backtest chart. They represent these two lines and these two levels for both the IB high and the IB low. These are the pullback zones, and these blue ones are the continuation zones, and they're named appropriately. And I push those levels to Bookmap from my RT. Otherwise, the rest of these levels here are just driven by the same exact data as are the sessions prices statistics. And that's about it, boys and girls. We got 8 minutes left until the until something happens. I don't know what. until the market on close orders. Well, aren't I glad that I didn't take that short? And we still have a few minutes till the market on close orders. Market on close and balance. I don't know why I always say that. All right, couple minutes here. That's 2 different days now. I've used a discretionary call not to take a counter trend signal. I'm going to have to give a bunch of thought as to how I can code that. And we didn't have much of a market on close thing. I got distracted there, sorry. Boy, that's irritating. I don't know why this is doing that. This is the market on close imbalance. It's 1,251 million S&P 500 sell side, 618 million buy side NAS 100, 436 million buy side Dow, and 350 million buy side Mag 7. So there you go. Now you know all the secrets. Yes, sir. Yes, sir. 3 bags full. Look at her go. Higher lows and higher highs. Boop, 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 boop. So, yeah, smack a thumbs up, a subscribe, drop something in the chat. It's good to hear from you. Welcome to the stream. And every morning at 8 o'clock in the morning for a setup, the pre-market analysis of what I expect to happen. The statistics, all of that stuff in detail. So there's that. And 4 minutes till the world famous witching hour here. What happened with the back test? Well, let's see now. That short got stopped. Actually, this one did not. This short trigger didn't get stopped, and it got scaled, and it's stopped, but would have been a scale. You know, that's woulda, shoulda, coulda. That's not how you trade. You trade with the rules. When it presents, you take it. In my case now, as I've said 2 or 3 times, I'm working on a further filter to remove or at least to try to analyze what I believe to be counter trend stuff and make it more optimized. What I can do, but not until after the market's over with because of the amount of work that's involved, CPU stuff, and why I don't have more CPU and GPU than I know what to do with. I beat the hell out of me. I can, in addition to running the backtest, I can push it to the chart and it will graph all of the trades that should have fired in their outcome over here. 2 minutes. Oh, baby. Here we go. I think I've pretty much got everything else put forward out there. And 1 minute until the world famous power hour. Is over. The cash close. There is a 15-minute curb trade actually in the cash market, but I figure 7 hours is plenty. That's what I'm thinking. "15 seconds. Shall I ring the buzzer or clap or do something like that? I've got 3 or 4 of these pads over here on this mixer that I never think about using. Pretty cool little mixer though. Well, it's 1500. That was get Tam up for school and stuff, our daughter. So I got to go on to put my soccer dad hat on now and get her organized and fed and lined out and over to college, and you know. So here we are. No trade for me. And let me just say once again, the most valuable tool that you have in your office is sitting on your side of the monitor. Get away from the screens, take care of your eyes, take care of your health, exercise, be hydrated, make sure you're not on tilt. Your mind and you are who's taking all this information in and making monetary decisions that affect your life in most cases. It's really important. Some traders spend all kinds of time and money on this monitor, that, and some other thing, something else. And the most important thing is you. So take that on board, as will I. I'm going to share one thing with you here. I'm going to just push this. First, I'm going to get away from that. Let's just put down here. Let's just put down 5 days or something. And let's just push this to the chart. And there they are. Now this would be the trades today. And this would be a scratch. This would be a scratch. And what else have we got? That's it. There's only 2. There's only 2 trades that met our criteria today. One was a short, one was an IB IB failure, and the other was an IB continuation. Right there and right there. And they both scratched. So there you have it. And in case you noticed at the bottom that minus 12 ticks or whatever, this particular, the target and the, whatever the coloring crap there and the levels, they're accurate, but the math to total the ticks is not, because it's looking for only one contract. And there are 2, right? There's 12 positive and 12 negatives. This should say 0. When it's a full 2, when it's both targets is a full winner, it says 48 ticks down here instead of 60. I put a dropped a ticket in. I can't figure out how to get into the back end of IRT to where this report lives and fix it, but it doesn't mean anything to me. I just feel like since I've shown it here on the stream, I ought to explain it. I can also do this, which is T2. So there's the profit band, there's T1, there's T2. This was the stop loss a minute ago. Now I can apply that. Okay, so here would have been T2. There would have been T2. Here's T1. There's T1. Stop, right? It's pretty simple. And then I always try to make sure and take those off. Oops. Not what I wanted to do. I can actually, come on. I can actually leave this on the chart in the daytime and they'll plot as it happens in the day. But I'm a little spooked about, I want to be damn sure it's not sending trades someplace, you know. So that's kind of where I'm at with that. Have a great night, and I am going to see you later, alligator. I'll see you at 8 o'clock in the morning, everybody. Remember, take care of yourself, get outside, get some UV, focus, soft focus down the street or at some gal next door, whatever it is. Anything closer than your screens, anything further away than your screens. The further the better, the horizon's the best. And